Hey, good morning.
Hey, good morning. How are you?
I'm good. Kind of feel beat up. Milk and I had a meeting last night and it lasted for a while. He's probably pretty tired too.
Yeah, I can.
Um, yeah, so AVP yesterday we were all babbling about the clothesline, that close state you gave
Sure.
me.
Yeah, we hit it.
Yeah, I remember how I went up and hit it and it took a little work, right? It wasn't an immediate thing. There was faith involved in it too, because it looked like, how in the world can we go up and
I didn't have the faith.
yeah, you gotta have the faith in trading. Trading's part religious. Um, but so there's a mechanical reason for it, because since it is an objective, a lot of the times, not every single time, it depends on how far it is. If it's something that's so far away, it's like just a huge outlier like .com or maybe COVID. Something that's just like really on a standard deviation curve, just so far. Um, Sometimes it won't make sense for the market to be able to retest that. Could, but it could be way in the future. But we're looking at smaller time frames. So when we look at closed states, their objectives, a lot of the times we do get the retest. So by knowing that behavior, we can make statements like, okay, we've closed a line, then we'll need to go retest it. The big question is when. The smaller the time frame, the quicker the test. So yesterday, since the time frame you gave me was of that size, I was like, okay, we have a very good shot at getting to it. And, just knowing that behavior. Same thing this morning, same setup. On our queues, we've got a open line at 606.63. We're underneath. That means we'll market closed at 9:30. We have the potential for a reversion to test that closed state. We always get overshoot. We're overshoot right now because that closed state, or excuse me, that open state's from yesterday. So we're getting an overnight overshoot of it. We're exceeding it to the downside. So it means by overshoot, we're just going beyond it. And you can go look at historically, you can say, you know what, there's always 2 points. On average, there's 2 points of an overshoot, 3 points of an overshoot. It varies. Right? The market's not a perfect mechanism. So there's variation in outcomes. Sometimes it's greater, sometimes it's less. But just knowing that we have a behavior in the market, we have these open lines we generate. And then once closed, we know we can retest at some point. We just don't know when. And maybe we don't even retest this one today. Maybe it's on Monday. It's a smaller time frame, so it's potential to retest today. But just
What
knowing
time,
that
what time frame
behavior.
are you seeing it on? What time frame are you seeing it on?
So that's a 20 wave 25 minute. And usually the way I look at it is on a cycle pattern, is we're breaking the market into cycles. The market's a cyclical, it just cycles around our pivot line. Our pivot line becomes a reference point, right? And we extend so much above, so much below. And on a 25-minute, what I look at is, are we cycling above and below the pivot within the session? So if I look at a session and I say, oh, okay, I see 2 or 3 cycles above and below the pivot during these past sessions, I know I've got a level of confidence that, oh, we can get back above the pivot, we can get beneath the pivot, and we can do it a couple times a day because it's showing us this cyclical thing that's going on, these cycles that are going on. And that's powerful because it gives us, we need a level of confidence in trading, right? If we're not confident and we don't have faith in our numbers, we can produce numbers all day, but if we're not using them and abiding by them, we don't have anything. It's just a bunch of random guesses, like, and fear. Oh, I got to get out. Oh, I got to get in. I got to get, you just change bias all the time and really don't know. So what we have to do is we have to develop a level of confidence. We have to say, okay, Russell's babbling about this pivot. He's been doing this for 2 or 3 days now. And he's got 3 days of experience. So maybe we go above, maybe we go below. I don't know. He's saying it. Open lines, he's saying, like, okay, we close them, we do retest them sometimes, I guess. I don't know. That's what he's babbling about. Now, if you look at so there's one thing about, I read a study a long time ago. They said people in this study, they said people can see something, but if they're told otherwise, they will believe what they're told. So you can see something and experience it, but if you're told otherwise, you'll disbelieve what you saw. And I can't remember where I read that study, and I thought, oh, that's kind of interesting. The market does the same thing. We're looking at something, we're looking at a map, a structure, but when we start trading and we deviate from the structure, market's telling us something else. It's making us fearful. It's making us make decisions because we're watching the price action, and it tells us something away from what our norms are, what we understand, what we can expect. So, case in point, this morning we have an open line. We're way beneath it. The market's red, looks really bad. And yeah, I've got another open line down beneath. On my graph I'm looking at on my 20 wave 25-minute, we could certainly seek that open line out that's down below, no question. But typical behavior, if we get a typical behavior come in, we're going to close this open line and we're going to revisit it. We're going to have to test it. That would just be a typical type behavior. And the outlier behavior, the behavior that we see sometimes is we close an open line and we run to the next open line. So a normal or a typical behavior would be close an open line, revisit the open line, have a reversion to it. The outlier behavior would be close an open line and then run down to the next open line. So right now we could say, okay, we're going to close this at 9:30. We can revisit it, but I do know I have a level of risk. I could revisit or go down to the next open line. The predominant behavior would be close and test, close and test, close and test. The outlier behavior is close and drop to the next open and close and drop to the next open. So right now, and two, with our guidance, our vector, we color up, we color green, we color red. So on this trade, like if we do revisit this open line that will be closed, we would expect green. If we're not seeing green, we don't have to do anything. Just sit here and watch it. Or we could say, okay, maybe we're going to close the lower open line, and you could join the short side because we're red. But the typical behavior, and we saw this yesterday, case in point on ES, close that line, we dropped, and then we revisited it. So that's how I could mark my arrow. I could color, put an oval up there, because I know that's a typical behavior. The market likes to reaffirm things. A long time ago, there was this guy, he ran a hedge fund, and I was doing stuff with him, building stuff, and he was like, you know what, the market, in my experience, it always gives us two exits. Usually there's double tops, double bottoms, not always. But he goes, there's always opportunity. And so we'll see here. The next one down is 596.61. If we did run more of an outlier and drop to the next open line. That's pretty deep. 596.61. I just want to chop. 596.61. Over on our right side, I colored up, I marked up our purple on our 15-minute graph. And this purple right now, I've got the mouse on. That is the, if we're on a mildly bullish move, which we are, or bearish, excuse me, mildly bearish, which is down here. This is where we tend to close at 4 p.m. Somewhere in that purple. This lower purple right next to this orange line, this is where if we start to get pretty bearish. And we do close in here, just not super often. It does close in there, it's just not super often. This orange line over the last 2 years, 20% of the time we stay above this orange line. Or 80% of the time we stay above this orange line, I'm sorry. Then 20% of the time we get to the orange or get beneath the orange line. So 80% of the time, if statistics hold, 80% of the time we stay above the orange. And more times than not, we'll be in this purple, if not higher, and just very rarely in this bottom purple on the 15-minute. So what I did was I said, okay, if we close this open state, we've got this call right here, 608. And so we'll mark this closed. So if we get reversion back to it, if we test it, then, some point today, I would assume that we will be 606.63. And if we continue red, and of course, that means there's no hope in that. We're just exploiting a behavior, a potential known behavior. Or he's using splicing and, milk show splicing and other people. So yesterday I checked the splicing and mathematically today, and it's just a mathematical statistic. It doesn't mean the market has to move that way. It's just statistically what it's showing it has been doing. So 64% of the time we've been closing above the 608.81. Every 100 trades, 64 of them would close above 608.81. And it figures all that out by doing relative, you create the splicing and it does non-contiguous data. So you can see Friday sessions paired against each other. Again, it's a stat. It doesn't mean we have to trade to the stat. It could run that 36% odds and be beneath at 4 p.m. Like anything with trading, it's just tons of exceptions. This time it worked. Last time it didn't work, It's always. So our floor that you can see how operative it was, it came back over here on the left. That's yesterday's floor value when I read it at 12:59. And you can see our clothesline here. We had support. And again, predominantly this 15-minute over here. So if we're mildly bearish, which we currently are, and the way we know that, the way we're understanding that, or the structure of this, is we're underneath the green dotted line. That is last Friday's close, 608.81. So that implies when we're underneath that last Friday, we're bearish. When we're above it, we're bullish. And our density, again, that purple on the far right, that's density. And that's density of closes that that have been showing up over time. So right now, this is our highest density right here, being under the dotted green line, Friday's close. And then this has, this isn't super common down here, does occur. Not super duper common in this lower purple to close at today. Within the realm of possibility, of course, because if it's on the graph, it's possible. And that's why I used the 600, because I said, okay, if we're going to close in this purple down here, what's a higher leverage play? Well, the 600 is a higher leverage play. You can see yesterday we went from 54 and then we peaked heading to 2. So
You gotta
it's
have
certainly
faith
a
that we're gonna
higher
go to
higher
six.
leverage play because it's down in that zone.
You gotta have faith that we're not gonna get
Statistically, mathematically, it doesn't support us being down there very often. We talked about the center of a range. The center of a range is usually a safer area. So if we pick a center here, about, I guess it's about here. You can see we came up, I don't know if I got it right center, but it'd be a little lower, I guess. I'm not sure. But anyways, we came up to about the center and got kind of crushed, pushed down. We had that, we're showing that yesterday as we were moving around in that level.
a question for you, Russell.
So ATG alpha, now that I realize there's a comment section over there, that's about the open state. So on the SVM, like what we do is we track the open states, the highs and lows that are carving out on the left. And so right now we're looking for reversion. We're looking for reversion back into that closed state. And again, it could take like all session. It could take Monday. You know, it's like wave 25-minute definition. It's, you know, a tighter time frame, so it can be more reactive, faster reactive, but doesn't mean that it has to close, has to revert on that close today. We can see it's kind of trying. The reason is simple for these open states, why they work. You know, bulls want to take the price up, bears want to take it down. So where's your logical place to come out at? What's the last high, the last low, the nearest one on the left? So as we're cycling up and down, it's like the nearest one on the left. You know, and then if you can get there, then you try to go to the next one. me change this to yesterday's floor. February 26. These prior closed states down here, these are supportive areas. So we'll mark this on our call. Came down here. At closed. Six oh two.
Hey, Russell, can you hear me?
All right, so we're bouncing off the bottom of our zone here. You can see the gray. And all that gray is just to match the bottom of the purple right there. So that implies if we close inside this purple box, of course, then, you know, the bottom of it has a level of support there as we see. And if we do break beneath, then this is, you know, again, this is the next area for the price to seek out. But that happens to be in the cards.
All right, I'm going to try this again. Anybody hear me? Help me out. I think it's that morning problem we usually have. Anybody? Okay. Morning, Russell. Can you hear me?
Oh, yeah, I can hear you now, AVP. Yeah.
It's I get a phone call. I put myself on mute, and then it doesn't want to come off for you.
Unmute.
We got some
No,
fat premium today. We got fat premium. I just sold, okay? I just sold SPX 6785.80, okay? 67, not 68, right? You're talking about we're at 68.42. That's a $55 move down after we've gapped down from 69.08, right? So we got a gap fill here that structurally doesn't have to, should get resolved, right? So I'm even going to say 6905, and this morning it was just, for lack of a better word, stupid. The spreads
Yeah.
on the ES Dom were like insane, insane. I'm
Yeah, the
looking at it,
premium's
gap.
jazzed. I mean, overnight, that call, that 608, that one
Yeah,
just took a hit overnight, you know.
yeah. Well,
Premium
look,
was really fluffed up in
our
it.
601. I was saying earlier, you're gonna have to have faith in that. We're back up
It's almost
to.
$4 on that 608. Wow.
Uh, yeah, but look at our 601, our weekly spread is down. It was in the morning up to $1.20, and then I think I've got so much on my screen. Let me just see. Now my wife's calling. Hold on.
And this stuff takes a lot of faith, you know? Because when you're hitting a lot levels, it's like, is it going to hold? Is it going to do what it normally does? Just like religious, very fast trading. Because we can produce all the stats we want, but when the rubber meets the road, it's like, okay, is it going to repeat? you know, I've been doing this a long time, and I'm like, okay, is it going to repeat one more time?
Yeah, I tell you, the whole world thinks I don't work when I trade, right? Like I'm
We
just
just need
sitting
it to
here.
work that one more time. So if we get a normal resolution, I got my arrow and all that jazz. Normal resolution would be like we come up here. And again, AVP and I were showing this real time yesterday on ES. So what we like to see is, when we talked about this yesterday, we like to see an overshoot. So we close that line. We really like to get up to it. We like to overshoot it. We want confirmation the market's seeing the line, overshoots, tests it. It's one thing for us to put a bunch of gook all over the screen, but then the market's gotta, we need it to acknowledge.
So I was looking at our spread, right? The 601.96 spread.
Yeah,
It got up. I got so much on my screen, but I think it got up to. Somebody got filled for $1.52 at the open, but you'd say more like $1.26, right? Now it's down to like 62 cents, right? You gotta have
yeah.
faith. You gotta have faith,
You
right?
got to. Yeah. Hey, you got to.
It
You got to
is.
believe in something. Like these purple X's, if you believe like, okay, the math has relevance and we're gonna, we have a low probability to close in this bottom purple thing, or poorly how to do that, how to figure that out on Monday. Yeah, it's like you got to have something. I mean, yeah, absolutely.
So on the ES 760, I mean, we're lagging a little bit, right? Obviously. But I
Yeah.
can tell we've got to the low of 68.41. So we closed the 51 state and we dipped under the 20% line. I got a 10% line at 68.15. Looking to the immediate couple of days, that's usually been the area that we've bounced off of. Doesn't have to, but
Yeah.
that gives me a little bit of faith. Okay, we've gapped down, and if we lose it, yeah, then the shit hits the fan, right? Because you can get to the 10% line. Sorry, the 10% line is at 68.15, and then the 2% line only happened on one occurrence way back, but it looks similar. It looks similar, right? The day started off
Yeah.
with big red candles, right? Little consolidation. No, but it was a continuation from the next day. Okay, that's the saving grace. We had a really down day, and then it was continuation on the next day. So if we have a really down day today and we end at the low, then there should be a Monday continuation, right? Here,
Yeah.
I'll post this graph, and you guys can see what I'm talking about. I'll post this in professional. But this helps me understand, possibilities, right? Uh, 50, hitting 15, that's a realm of possibility today. Don't get shook up if we do that, right? And then that's a great reversion point. If not, well, then hold on to your pants because it's going to be really, really painful to the downside. And here you're looking at, three really lines. You're looking at the current line, which is right above that 20% line. You're looking at the 10% line, is where I think the low of today could possibly be. Doesn't have to be, could be worse, but it also lines up with buyers will absorb the last green box. Here you have confluence again, right? And then if you look all the way to the left, oh my God, today, I swear to God.
Yeah, AVP posted his graph. You can see the levels. So that's just showing us distribution of price. So the distribution, 20% is down to that 845 area. And it doesn't mean we have to hit any of these levels. It's just where they're being distributed. Guidance, right? We can look over and be like, 20% of the time we get there, 50 there, 80 there. And just see the resolution of the market, where they're resolving price at. Just helps give an idea. A lot of people, you'll see on YouTube and stuff, it's like, oh, RSI, MACD, CCI, whatever. And we're just playing it like, okay, here's distribution. And, whatever, something's showing, who cares? It's just like distribution.
All right, mic check. Can you hear me, Russell? Everybody
Yeah.
else can. Can you? Okay, good. I can't get a break today. I swear to God, this morning's been like can't even focus, and it's a crazy morning, right? Price action is all over the place. I'm seeing gaps left and right, like micro gaps, right? That's not supposed to happen on ES. ES is supposed to be liquid, right? You're not supposed to get a 4 tick gap. You're not supposed to get a 10 tick wide DOM intraday unless there's massive news, which there isn't. We had our news this morning.
Yeah, it should be fluid technically, but
And look at you. You guys don't like my spy. Spy hasn't updated yet. Okay. Chris, thank you for telling me that. That is helpful. Those are usually the days where I do not trade spreads, but I made a spread already. No, there. Let's see. I got one. Did it update? No. Spy's not updating OMMs. It
I'm
just probably has to catch up.
I'm watching the system running.
Probably got to
Um,
catch up.
let me see. So what'll happen
I'll
is let
check
me
data
check.
warehouse. Let me just do a spy daily and see if the ceiling floor comes up.
27th.
Yeah, no, I don't have it on the charts. Let me go into the data warehouse. It could just take some time to rev up. We did
There's
have.
so what'll happen is if there's high volatility coming into the session,
Yeah.
we get I call them icicles. So I don't
Ah,
know. Do you remember like the icicle
yep,
thing? We
yep,
have to filter the
yep,
icicles out. And it's because the volatility we're calculating out is so large. Coming into it, the riders are not sure. They're
yeah,
unsure. Their calculations are like for a big volatility envelope.
yeah.
And you're seeing that AVP? You
Yep, in the
just said
premium.
that yourself. Well, premium plus you're seeing gaps over in the
Yeah,
order book. We're jumping,
yeah.
right?
It's
That
an unusual
OMM,
one.
yes, and that OMM process is reflecting just that.
Yeah, you got to be patient.
Yeah, and we have to be
It's
patient
so.
for it to home in on the data. So what we'll do is we'll actually filter out the data. We'll be
Yeah,
like, okay, we can't run a computation on icicles because they just drop at the bottom of the graph, and so we skip over that data point, that drive data point, and it shows up in OMM being, it looks like it's a lag, but it's actually trying to protect us and say that now the envelope, it's too wide, it's not, there's not a consistent reading, and it just will not show it. And
I don't
now
know
you can
what's
see it in the
going
data
on.
warehouse. If you run the data warehouse, you'll see everything. It just throws it in there, good, bad, or
No,
indifferent.
there's nothing coming up on data warehouse. It's coming up for. It's coming up for.
For
What do you
this
call it?
spy.
For not for spy, but for QQQs. I'm gonna post this. You guys
Let
got
me
to
check
see this.
the
This
spy.
is stupid. This is just stupid.
Oh yeah, spy's lagging.
Yeah.
1559. Yeah,
But
it's the volatility is still
yeah, no, that's fine. But take a look
a
at
little.
this, okay? This is my DOM. This is my DOM. I just caught it and it's still happening. Okay? 52, okay, to
Yeah,
56. You've got a 4-point spread on ES. Either something's
yeah.
wrong with my DOM, which it looks to be, or but then I see it, you know what,
It's
I'm going to
it's
disconnect my
showing
data
it's
and
you know
connect
what?
it.
It's showing up in spy. OMM's having a hard time. So whatever's going on, yeah, and maybe
Something's
who
going on.
knows?
I'm going to disconnect my
Yeah,
data
something's
and
going on.
connect.
There could be some data issues with the exchange,
Yeah.
or it could be this is the
So rhythmic,
reality of it. You don't know, you
rhythmic,
know.
rhythmic, because E-Trade is giving me no lag. Rhythmic was giving me a lag, but a lot of people use Rhythmic, right? Rhythmic is powerful data.
Yeah.
I reconnected my data, disconnected, reconnected it, but it's a pain. It's a pain because you're losing the information in the meantime. I got to be cautious today. I hate when you don't have Good.
The process is running, so it should. We'll see if it clears up. If it can't, if OMM can't compute good numbers, it will not.
Yeah, and the way it should be. Look at this. Here's our little pump. Okay. Okay, your calls are paying off. Uh, we're already at right under 606, right? You had said 606.63. We're about $1 away from that hit. Not bad. Not bad at all. Our QQQ spreads down to 56 cents.
I don't know if you remember AVP. So yesterday we got almost to the line. Remember we put the
Yep.
open state line in there. We're like, we got to hit it. You get right a hair within it, market just pulls back. You're like, there is no hope. We are not going to hit that line. It just pulls back hard, right? It is vicious. Then we stabilize, turn. I mean, we just run it, right? We ran to it, overshoot it, and you know, it is what it is. It can pull back, it can come back down, it can turn and run and hit. It's traders, everybody's competitive. They're like, okay, we're near 606.63. Is that good enough? You see me draw that oval. We're almost tipping that oval. And I'm like, because that's kind of the zone for me. I'm like, yeah, it's pretty good. And then if we extend our oval up here, try to draw it on the call side. So it's kind of like skimming it like that. And
Wow.
if we extend our oval down here, I'm making this up. I'm just guesstimating where it goes, something like that.
So we're gonna have to use QQQ as a proxy for SPY right now.
Yeah, and that's easy enough to do. We know how to mark it
And
out.
I think QQQ says we might. It's a pivotal moment here because we're tangled up into the PML. We need to cross over the PML. But what I do like is the red line is over the lime green line. So it's saying maybe now we go bullish.
Yeah, yeah, bullish setup. Bullish bulls are in control.
But we're also in the middle of no man's land for me to enter a bull trade. There was a really good trade some people caught. And it's all these damn phone calls. If I showed you this was a no-brainer. This was a no-brainer. It was a defined range, and you were just waiting, and you knew where to take the bets. You knew where to take the bets because it also lined up with Milk's charts, right? You would have lost once or twice, but it would have eventually paid you. You can just see it clearly, right? Push down balance. Okay. Checked under, didn't like it. Checked under again, didn't like it. Let's go check the top side now. Structure, it's going after structure, and it's going to target. And when it hits the target, it'll make another decision. Going for the target now. But you can't trade when you're distracted, and I was very distracted this morning.
So what we want to see now is our classic overshoot of our 606.63.
Correct. We're right there.
And
Right there.
remember this plays the same way all the time. Like yesterday played the same way when AVP and I yesterday were talking about this.
Yeah.
I mean, so knowing these behaviors.
Okay, I got to ask now. We're coming up against that line, 76, the white line. Now we want to see on ES if that's resistance, right? If it is a
Yeah, that line's trouble. That's
yeah,
trouble. That's trouble. So we gotta, and you don't like to see this print. You know how that print's really wide, high?
yeah,
Because it like really takes the fire out of the bulls, because the Q, you can imagine it's buy, and finally they've exhausted. If I swear, if we look at a fractal graph, it will channelize right there because you'll see the fractal graph is showing how people are submitting orders into the queue. It's a reflection of orders going into the trading queue. So when they're hitting these servers and they're putting order, they're stacking, and then they finally get to that area of distribution, and then they back off, and that's what we see there on the H1. So here's our overshoot.
wow. Still nothing on OMM for SPY.
Man, I might have to reset. Let me check the process. I don't know.
Everybody run their QQQs before he resets.
I'm watching the process and see if it's cycling
Yeah.
correctly at
Oh,
SPY.
finally.
I'm
Thank
watching.
God. I made at least a little bit to show up today. My spread closed out very nicely. Not much, 80 cents to 25 cents. I'll probably go to zero, but I've learned my lesson a long time ago. I like peace of mind. When there's fat premium and you can find distance and you've got structure in between you, like we showed on the fractal chart, good probability. And you just got to play probabilities, right?
Yeah, that's all we got every day. All right, it's processing SPY.
That's what it is. Today
Hmm.
I lean heavily on my good friend Milk, right? Show me some floors and ceilings to play off of. Usually I'll run them myself, and he's got a way to do it as well. Let's see, what's this?
All right, so it's reporting
Yep,
10:11.
yep, yep,
We've got.
yep. Finally, yeah, finally.
So yeah, it was just finding squirrely information at first. So
Yep,
yeah,
it just didn't want to give you. I remember when he used to give you like those 100 points away ceilings and floors, and you're like, "What do I do
yeah,
with that?
they give you
What do I do
yeah,
with that?" Right?
yeah. It'll capture that stuff. It's brief, but
Yeah.
it shows up. It derives it.
Our spreads are down to 30
Right.
cents.
So if you look at our 15-minute QQQ graph over here, 15-minute, lower right-hand corner, we're now at the top of the range. See how we're at the top of the purple? So on our density of closes for today, so we're looking at historical volatility, we're applying it into the future. We're right there. So now the market has to make a decision. Will it get above that level? Normally we close here. Here, a normal week, just a normal average week, nothing good, nothing bad, just, regular trading. We close in this purple here. So can we achieve that, or are we going to stay mildly bearish under our dotted green line? We have gap here, which is important to know. Like there's white, we consider it white space. There's lack of information. So if we can get above this, means we can speed through this area and come into our lower purple at least. So we'll have to see what happens. But we're now at a resistance area, coupled here by ES. ES is struggling. We'll mark it red. It's a resistive area. So what we'll do is, this is a natural area for the shorts. So we'll come over here. We can mark that up. You can see we're at 31 cents here. So this is a area for entry. Top of lower purple. I'll just call it top of lower purple. Now it's up to the market. If there's enough bullish buying to take us out over here. So, if we can't get above that 15-minute top of purple, then the size starts working. And this is a call of a credit spread here for a call side to of trying that, because we're at a resistance area. And AVP and I were talking about this over here, this QQQH1 correlated value, that's a resistive area. A potential resistive area.
Here's a question for you. On your W20 5 minutes, how many times on a SPY or a QQQ do you want to see rotation in a day, inside one day?
I just kind of looked back left, because we could run all the stats we want. You and I know, like, we could do stats from now until the end of time, but I just looked back left and I see there, maybe there's one or two or three rotations above and below. So I just kind of gauge it like that. I'm like, we haven't rotated above or underneath. We'll probably get one. Or
I
we're
was
above,
taxed
haven't
for my
rotated.
personal mileage because I forgot to report it. So I lost
Yeah,
$800.
Somebody said I muted them. Thank you.
Yeah, gotcha. Yeah, so I just look left AVP. I just kind of, you know, we're kind of playing poker, kind of look like, are these guys getting us above and below a lot, a little? Have we transitioned today yet? Could be looming. Um, you can like, I can run stats on it and stuff, but I just kind of look over to the left. Level
I
of
like this. I
experience.
like this fractal chart Luke just posted. You see the ascending line that they're trying to hold, right? But from the looks of it, it's hard to tell. We definitely dipped underneath it, right?
Yeah. Yeah.
Definitely dipped underneath it, but
Uh,
you got to think that they're going to get above 608 to close above that line. That's a little bit of a challenge. There's that
yeah.
pullback you were talking about,
Yeah.
and guess where we pulled back? Right to the box.
Yeah.
It's unbelievable how candy price works. I'm just doing this for visual sakes, right? There's other stuff underneath the hood that is showing us why this is working, right? Boxes should not be emotional. It should be what you actually see, right? It takes a little practice. All I did was copy the same box, right? The same exact box. Okay. Look how funny this is. Look how hilarious this is. Same freaking box to the wick. Come back and
Yeah.
check, right?
Yeah. Oh yeah.
So it's showing patterns. It's just showing patterns in a different way, right? And you go box to impulse to box. That's what price action is, right? And I'm just curious. I'm just curious how good I drew this box, right? I want to see if it played up on the other. Make this stuff up. Russell, you got to see this. You got to see this. I can't make this up, right? I used the bottom price action, right, to draw the box, and I was just curious to see if the market was respecting this kind of check today. Okay, so I went back and I took the same box and I put it for the 4:30 to morning action, and it's like right on, right?
Yeah.
The market is saying we want to move in a pattern, right? We want to check X amount of points, bounce back and forth, right? And then they break into another set of the same range, right? It's checking approximately the same range. I mean,
Yeah.
this you're going to see this you can see in fractals. Because fractals are taking patterns, right? This is just I see this, if you do this often enough and you're honest, okay? If you start making it so that it fits your bias, then it doesn't work. But if you're honest, right, and you say, okay, you draw it out, that same box should repeat itself over and over again. Before I had fractals, I didn't know at all time highs what's another level, right? Because you're at all time highs. There's no information above. Fractals gives you that information. There's an advantage. OMM gives you that information. There's an advantage. Spread Monster gives you that. There's an advantage. But back in the old days, I drew boxes, right? So these are old habits that just visually stay with me, right? I don't actually draw them on my charts. I did it just for representation today, or when it's like I'm doubting myself. You'll always doubt yourself when you're trading. Did I actually see this or not? Then I'll do it, right? But what you did see was you had that top box, bounce, bounce, balance, impulse down. Another box, checked it for a good hour and a half, peaked outside of it, right? And then what happened? Impulse move, right? Where do we go, right? And these all line up with Milk's levels. How crazy is that? Now, Milk drew these charts sometime overnight, okay? And he got around to posting it right before the market for you guys. But to know these kind of interaction levels, right? It's powerful. It's powerful, right? It's up to you to ask really good questions. For example, when we got up to that 6680, right? We are at the top of the green box. It's a great question. Do we continue up to pivot? Now, you saw on Russell's different screens, you saw different confluences that says, yeah, but I don't know, right? Because you're hitting lines on the bottom right hand chart, right? Okay, you're at the top of the gray box, right? You're at the top of the pink box that we drew days ago. You poked over the QQQH1 line on the ES chart on the top right, okay? You're wicking above it twice, right? That tells you, hey, I got to make a decision. If I'm in the money on positions, do I choke up? Do I get out? Do I trim? These are great questions, right? Only you can answer them, right? We had a pullback. Where do we pull back to? We checked the old box, okay? We just wicked into the old box, and he says, I don't know. I don't know. Maybe it's too cheap. I'm going to hang out in this new box. I'm going to play this new sandbox, see what I like, right? It's probably going to wick a little bit above, wick a little bit below until it figures out what it wants. We don't know what it wants. We just know when it's testing outside of this range, right? And till then, it's a range bound trade. Okay. You either have patience because you're hypothetically in the wrong at the bottom of the box, right? And you're going to wait to see, maybe hitting the top of the box is enough money for you. Maybe you want to break out, right? So if I'm right in the middle of this box and I've got nothing there on Milk's charts that tells me, their structure here, I'm going to wait. I'm going to wait to see what we do at the top of the box, right? So this is how information helps you ask better questions, which leads you to becoming a better trader. That said, we're down to 27 cents on our 601.96 spreads, guys. And I got to tell you something. I was out at 40 cents 2 days ago. This thing went back to $1.20 twice for you to reload if you had scalped out of it, for example. I did not. Too much going on at the moment. But you really have to wait the entire day to get rid of that, okay? Because it will not go to zero till 4:15. At some point, you're going to start to see some nonsense like a spread of -5 cents, 10 cents, right? You're not getting filled. You're not getting filled. You might get filled for a nickel. You might get filled for 10 cents, but you're not getting filled for, zero unless somebody market orders, right?
Yeah, you got to run naked then.
Yeah. There's another thing. Listen, there's another thing you can do. You can put an order to buy back your short side for like 3 cents, and
Oh yeah.
and then just market order the long side, right? And if you get a penny, you get a penny. If you get nothing, you get nothing.
I was having a conversation with another guy, and we were talking about this stuff, and I said, "Dude, I don't tell people this, but I just leg in sometimes."
Yeah, that's a,
So
that's an that's an advanced strategy.
yeah,
You both know that.
if you're exactly, and I don't want to get real complicated in here, but sometimes just leg into these because the insurance will be cheap. I go up, then I sell my premium, and the spread is just like crazy
I know, but
because
it's
cheap
not
insurance.
advisable. I'm going to put you in a cage there. That's not advisable. You're going to have people mess up royally. I've
Oh yeah,
actually
that's
sold a
why I don't
spread.
mention it.
I've actually sold a spread that I legged into where I created 100% losing scenario. 100% losing scenario, right?
We don't
And
want
you're
to
like,
do that.
how did you do that? Well, simple. My insurance cost more than what I got for the other bit, and it was a bad fill.
So let's look at the math. So there's a rule. Do not when we're underneath this line. Okay, so when we're
Which line?
legging
Which
in,
line? There's lots of lines. Which
we're
line?
under, see this white line right here on our 590, our 601, 596 wide. So see
Okay.
this white line? If we're
Mm-hmm.
underneath the white line,
Mm-hmm.
but when we're underneath the white line, if you're lagging in, and you're way up here, see, this is our reference. We've got a red line, we've got our white line. So if lagging in, our insurance works best down here. So if lagging in, insurance at the white, underneath the white line, and then our sell, at our red above. And you can see here mathematically, it could be like, Russell, that's insane. If you look here mathematically, it's true. It's working that way more than not. So there's a graph. So I had Elk Moose was asking me something this morning. Some stuff I don't show. But anyways, he was asking, he goes, man, on Spread Monster, why is it showing all these white lines? Or flat lines. Why is it showing all these flat lines? And I'll show it. Let me grab it. I'll put it in there. Oh, let me grab it real quick.
Mark is finally calming down. Wants to figure out what it wants to do now. Hey, we got ceilings and floors from Milk. That's fantastic. I've been waiting for those.
All right, I posted the graph. And so the sinusoidal waves, the S waves on the left and right, are implied volatility. The center of the graph is historical volatility. We're mapping implied against historical, and we're doing it visually. We're not using Greeks. We're not using any crazy math that people have come up with over the years. We're mapping it exactly how the market is asking. Is we're using the market's pricing. We're not using, there is nothing between us and the market. The Greeks, there's something between you and after expiration, the red line we draw in our options, those flat lines are the equivalent of that red line we draw in our options, which is kind of conceptually, it may be hard to understand at first. So this is showing destruction of the option chain of the premiums. The flat lines are complete and utter destruction of the premium. And if you look at the time frame, this is February 26th, yesterday, after the markets closed. He ran this at 10:40 p.m. So it's showing you how the chain ended up, and it ended up destroyed on the call and the put side, a lot of it. The only thing remaining are the little, yellow areas that he marked off. Everything else was destroyed. I'm going to show you something else, and this has been in front of everybody since I put Spread Monster out there, 2 years ago, plus 2 years ago. It's been in front of everybody ever since, so I'm going to show you something. All right. So this has been there the entire time. All right. So let's look at an iron condor. So I just posted into the professionals desk an iron condor. Oh, see the shoulders? Oh, I put
we can't
Jack
see
of all
it.
markets. Yeah, I posted it in the professionals desk. I don't have it on the screen.
Gotcha.
Yeah, I just posted it in. So, Spread Monster figures out the shoulders. You think I'm insane? Watch this. All right, so let's look at what's going on here in a bigger sense. All right, so this represents the week in front of us, and this is, you know, you can do this before the market opens on Monday, as I did. So here's the overall structure of this week. See our red dotted line down here, and see our solid green line up here, and see the iron condor and see the shoulders. If we have a run-of-the-mill week, Spread Monster figures this out mathematically. If we have a run-of-the-mill week, you know, it shows us the solid green line. It shows us the dotted red line in front of us. Now, the order flow stuff, you know, as people are coming in, throwing orders in the queue and stuff, it's a reflection of structure of what this is. So it's a reflection of it. This is the structure based on math. It's a map of the week. Then people come in and they craft orders around that. Now see our high 619.20. See the top of the purple 619.20. See our green line outlier move above. See, so if you come in here and you're like, where's a place to short? The market as a whole sees this stuff, right? The institutions. Well, it's at the green line. Top of it, technically, but the green line is the next best choice. And because we're doing RTH, so it becomes a green line and RTH and the dotted red line. So you can see how they shorted it. If we had a perfect move today, it's almost perfect. So this is almost a perfect week. A perfect week is solid green line to dotted red line. And look what happened. Solid green line, almost right down to dotted red line. That is a perfect trading week. Dotted red line to solid green line, perfect. Solid green line down to dotted red line, perfect. This is like perfection on the week. And look at your iron condor. You're burning it up on both sides. That thing's $5 right there.
Hey,
Plus.
Russell, I don't think anybody can see your screen right now, what you're showing.
Oh, did it go? Can you see? I can't see TOS.
No, we can't.
Oh, okay, let me restart. I don't know why it shuts off all the time.
Thank you.
Thing's insane. Well, most importantly, I can see it. Kidding.
Yeah, right.
There you go.
You got to be able to see it.
All right. So again, perfect week. Spread Monster figures this out. I went in there on Monday morning or Sunday. I don't know when I went in there, but it was before it opened, the week opened. You've absolutely got to do this before the market opens for the week. Whether you do it Friday after the close, Saturday, Sunday, or Monday morning before the 9:30 a.m. open, you have to pull the values because it's got to have a defined structure for the week. So again, if you can see the screen, see dotted red line. A perfect week is dotted red line, solid green line, dotted red line. That is every week. If we can do that, you know, that is like what you want.
So technically, we should have sold the 2025s.
Oh, well, you know, I don't show all this stuff, but
I know,
you
but
run yeah, I wait for other people to be like, oh, how do you use this? What are you doing? How does this show up? What are the values? That's how
hey,
I am. I'm
remember what you committed
reactionary.
to, right? Remember,
What's that?
remember what you committed to. One spread trade every Monday, right, for the week. We're going to change some
Maybe.
people's lives.
I'm waiting for somebody else to copy me and just be like, is this right, Russell? And I'll be like, yeah, that's how you do it. So our spread here, you get it Monday, get it today, get it whenever. I don't care. Do whatever you want. But the objective is to go to a penny, a dollar. Now you do that every week and you could probably make a few bucks. You do this iron condor I just showed every week, probably make a couple dollars. Don't do it, don't make any money, watch it, or don't care. Either way, I don't care. But it's dotted red line, green, green to dotted red. Perfect. Now we can be lopsided. We don't have to be that. We can be dotted red, dotted green, dotted red, go up to solid green. But this, you can see on our shoulders on an iron condor, you can see how that's working. You're burning off premium on both sides. And then, because we know everything, we know where we have density of close, that's purple. See, everybody else, like my uncle, he's a physicist, and he's worked over in the lab in New Mexico where they made the atom bomb, right? Thanksgiving, we're sitting around, and he knows I make money trading, but, you know, I'll be like, well, it's like, because people, like, when they think about it, they're like, oh, you know, you make 12% a year because, you know, that's how much the Dow moves on average, or whatever it moves, I don't know, 12%. So anyways, that's their frame. Because you have to have a reference. That's his reference frame. And I'm like, well, you know, the market does have a structure to it. It's not a totally random system. There are people involved, have skin in the game. So, you know, things, it needs to operate as a business. You know, it's, oh no, it's random and blah, blah, blah. Okay, if you say so. But here, so we're creating structure. We're trying to understand structure. So in understanding and creating structure, we're looking at zones, we're looking at areas, we're looking at, so that's called the density graph. The reason you can start to see it's density graph is because these purple X's. So users showing that. See those purple X's? So all I do is, it's not perfect science. There's an art to it, right? There's distribution of the purple X's. To make a decision, I make a decision how I want to carve them up. I look at it. Because I don't want some black box telling me buy at 34 and sell at 35. I want to and structure the market and what's behind that structure. And spread monster, even though like we may not understand how it's driving all the values, we can look at it and be like, okay, it looks plausible, you know, so maybe there's something to it. That looks plausible. I kind of understand the fractal thing. We're disaggregating market. We're showing reference above and below. Okay, great. That feeds into spread monster. It looks at that, creates sinusoidal waves, creates zones, figures all that out. So it's math built on math, but you can see it working in real time here. We look at that structure. We define the structure. I carve the purple X's up, as you see on the screen. So now I have a zone for close for today, which gives me guidance. I know that if I'm swinging for the fences, I'm just going a long call. I would be up here on the top line, purple. I'm swinging for the fences short, bottom purple. And, you know, I can use the vector as a guide for helping of entries. And I know too, this top purple, I don't get up there very often. So those are going to be losing bets by and large. When I do hit, it'd be great, but by and large going to be a losing bet. When I go to the bottom of the purple, if I'm trading long put, same thing, could be a losing bet. You know, it's not often we get there. I know the extremes. I know up here and down here, those are extremes. Happen. You make a lot of money when they do happen. They're just not often. So if just blindly trading week over week, place a bet, pays off great, doesn't pay off, well, you know, because they're outliers. So the more common thing to happen is to be within this purple and this purple here for our close today on Friday. So that's more common. It's because what user's showing those X's. Those are marking in relative price where we tend to open. If you're using Monday through Friday, where we tend to open for the week and where we tend to close for the week. Market's not a perfect system. You'll have some X's that are not distributed to each other. Something comes into the market that's unknown information, kind of sends it higher or lower than what is a typical move. So that's what we see. We see straggler X's. That's fine. You know, you always, it's like anything. Your car gets a flat tire. Well, you know, it doesn't happen all the time. It happens occasionally. Same thing. Happens sometimes. And you take your lumps. You know, we're talking about being consistent day over day, week over week, month over month, year over year, and not going into the market one time and having a trade fail and then throwing up a hands and being like, oh my God, nothing works right. Market's against me. That's not how it works. It's like just, you can see there the X's, the density of X's. Just knowing the density, I don't even, if I'm new to this and I haven't looked at this very much, like, Russell, I don't really know what you're talking about carving these X's up. I can't really understand what you're saying. Then just take, like the graph user showing, take the bottom red dotted line and draw your purple line from that up to the top of the solid green line and be like, I don't know, Russell's telling me something that the close is probably going to be in here. Okay, whatever. Draw that and then be like, okay, on Friday, it's 16 p.m. Eastern. Most of the time, you're in that zone. And a few times you'll be out of it over the course of months or years. Not always will you fall in the zone. But by and large, you will be in that zone. Now, if you can craft a trade or set of trades, do whatever around that, like I'm showing Iron Condor, like if that rings a bell and you're like, okay, I kind of understand what you're saying on these shoulders, I understand this purple, so I kind of get what you're trying to tell me, and you struggle through it and you can craft one, or you know, just craft it and put it on the screen, right, and watch it over the week and then watch it against what you map out. Because like this morning I'm babbling about the open line and we're going to close, we're going to revert to it. And yeah, every time the market opens, there's a risk. Maybe it won't do it this time. Maybe we'll seek out the lower open line. But, you know, so we're trying to craft trades around the data that we understand, these data points. So these shoulders are, like I put in there, solid green line, dotted red line. You know, so you can take what user's showing when you go into Spread Monster and you can mark out your purple zone and be like, okay, like 80% of the time I get it, I'm kind of in there. You know, and Iron Condor, it's kind of forgiving. You can see the slope of the lines. So you have a little bit of leeway if, let's say you kind of start to get the knack of this and you're like, okay, I'm kind of getting this. And you're wanting to get more aggressive with it. You're like, you know what? I'm going to tighten up my purples. And I'm going to throw away these top ones, these few top ones, these few bottom ones. I'm going to come in there because I'm trying to get a higher premium. You can do that, of course. You know, and you bring your shoulders in. You want. So that orange line on toss. Okay, the way that came about is for the people that have the system, I posted a query. And that query looks, so we keep derived data in the database, right, in the data warehouse. So that query mines that, and it tells me where the orange line's at. I graph it out. So I go in the data warehouse, I go underneath the graph thing, and it shows me the distribution of price from my known point. And that's how I can figure out the orange line. It's in the, I posted it the other day in the, I don't know what it's called. Fractal X chat. X hub. Yeah. So I posted it in there. And you can find when we're doing this, we need, we want the government steady. We don't want them being crazy during the week. Don't want any surprises out of the government. Don't really want any surprises out of any company. And the status quo. You can even see now NVIDIA. It weighed in on Wednesday after market. And you can see we're still playing between our red dotted and our green solid line. So when we're developing this stuff, like the orange line, there's always an assumption. Like when we're building systems, institution, so we have one of the methodologies we use is method 1. And method 1 has all these workflows and things you fill out. And one of them is assumptions. Because when you're building a system, you have assumptions. You have requirements, you have assumptions that come out of it. And for trading, one of the assumptions is we're going to move around the average more than not. So if we can find a line, because the market is it's doing one of two things. It's either moving towards something or away from something at all times. So if we can find that line that we're moving away from, or find that line we're moving towards, then we can craft something. Now, in our spread, and AVP are talking about this, it's in the upper left-hand corner. It's the 601 and the 596. That spread is designed by nature to go to 0. Throughout the week, it's set to sell premium, and then it's set on Friday at 4 p.m. to go to 0. And you're like, how in the world can you figure that out? Like, go to 0 on Friday, and you know that like on Monday? You know that even before the market opened? How do you craft that? We're finding a line. We're finding something the market is moving away from. So we can either craft moving towards or moving away. That is moving away from. We're trying to find predominantly where the market is moving away. Now in it, we talk about skew. So we've got skew to the market. And Milk mentions this a lot, and it's a very, very important thing. The market is, we know over time it's too long, and there's reasons: inflation, earnings, pulls expanding, trading inflation. So things just ideally in a working economy, they get more expensive. They do not deflate. So in a working economy, which the Fed, one of the charters is to try to keep the economy working by managing rates. If they keep the economy working, we have inflation, rising stock prices. If we look over a 20-year graph, we see the stock prices moving up. The index is moving up. There's also a life cycle to each stock. So if you do an individual stock, that may not be true. But if you're doing an index, something that's measuring the broad market, then we should have inflation over time. Good companies thrive and the bad companies fall out. But the market becomes a reflection of the good stuff. So if we naturally skew our system, our outcome to go with the market, all we need to do is find the price line that we're going to be moving away from. Now that line is that white line underneath that this week. So you can see I put in white using the white line for the spread. So on Monday, prior to market open, I'm like, based on the spread monster data, what it's analyzing, the market should be possibly moving away from that white line. More times than not, it does. So that's how I arrived at the white line. I went to my outlier, purple, on the far right bottom at closing, and I derived the white line above that. I said, by and large, for the week, we maintain above that white line based on what spread monster's showing me, all that math that it's doing. And I can visually look at for confirmation. So it becomes a decision for me, like where, based on what spread monster is showing me, where is my comfort level? It throws in the dotted red line, and I'm like, okay, it's showing me dotted red line, solid green line top. That's where we tend to fall out on price action during the week. So I'm going to bring my white line a little bit beneath that. And I'm going to bring it slightly above the outlier closes, that purple at the bottom. And if we can maintain that throughout the week, that spread works because it's underneath the 6, it's at 601. That means that we could be a teeny tiny bit, we could be mildly bearish, teeny tiny bit bearish. We're underneath last Friday's close, so we're for the week, we're bearish. So it can be mildly bearish, teeny tiny bit bearish. Can't be full out bearish, but we can be somewhat bearish for the week, and it can still work for us, that spread. So again, we're creating a model, and as the orders come in the market, institutions and everybody's doing the same kind of stuff like we're doing. So they're developing these ideas of where the market can distribute price, and then of course the order placements based on that. That's why we get the pull down and the moves up and all that jazz. So all the technology, we're geared towards institutional type data. We're not really gearing, we're not over here and throwing in oscillators and wolf wave and you just use Elliott wave. Some institutions will do Elliott wave. It's just a little hard. It's not my thing. I used it for years and it just annoys me. So we're trying to look at the data. We're just looking at the historical, the most common movement, and then using that as a guide. So on Monday, I poorly went through constructing a graph, but you're going into Spread Monster, you're just looking at those values and just transcribing them onto a trading graph. Let's say the market, I'd say it's kind of solid, not going too crazy on us. Let's say over a 52-week period, we do maintain, we do carve out this white line underneath the dotted red. Say over 52 weeks, like maybe 42 weeks, 40 weeks, we stay above the white line. So we have 40 wins against, let's say it's, 52 attempts, 12 failures. That's pretty good. I mean, anything over 50% is good, right? That means as long as our reward to risk is equal, anything over 50% means that we walk away with something for the government then to take that away from us. And the red line, again, we discussed this. This actually goes to expiration, whatever that is today. I don't know, wherever it belongs. But the red line is using the volatility of the market because we're always, as we see, we anchor it to the usually I don't come into the little spikies. Usually I kind of come into more of the little body of the candle, something like here to red. And knowing what we just showed on Spread Monster in there with our flatlining and premium, that means that we have, and Milk showing it, it's like beautiful, showing the SPX. That's just wonderful, right? It's insane. So yeah, we're trying to go into zero. You can see how, it's just a really great tool and very simple. A lot of people be struggling with the Greeks because that's what everybody shows. And you're like, you know, trying to figure out this Vanna's charm thing and this Gex thing, and we're over here just drawing a line in 5 seconds and being like, well, that's it right there, the volatility. So we peek into volatility, we hit the red line, get above the red line, collapse volatility, we get underneath the red line. The spread monster, it's showing factually, mathematically on that graph up above that I posted at 8, 9, 11, would have been 11:29, right? 8, 10, and 29. The flat lines, that's the equivalent of the red. So it's showing that premium is getting priced out. So we just draw in the, and you can see here, we had the little pop-up on low yesterday. We were at a 1, so it came down here in the 1 area, kind of got up here into the 2 area. So that was the move. It's just a 760. It could last for that session. And this thing was way overpriced. And this thing too. Limit. I can see if we go back to volatility, you know, we draw a red line into 0, that it is following it down. That's why a lot of people have so much trouble with options. They'll, you know, they're always trying to buy them long and the trade doesn't work. And then they are step aside and be like, I don't know what's happening. They just like, you know, they're just priced out to decay as much as possible. Now we've got, by knowing stuff, we can create trajectories. So what I did was I took the close for last Friday here. You can see where I started my yellow line. And we can actually create geometries of the market. And I drew it into the top of this potential close here. And you can see how it's resistive. Now we're back into the RTH session. This is RTH data. So when we get extended trading, after hours trading, the lines, you know, they still do have relevance. You can see this has relevance. You can see how that one was resistive. So they do have relevance. It's just the most relevance is during the period they were created, which is RTH, 9:30 to 4 p.m. And, you know, Milk will show splicing, very powerful concept. And I looked at it for the Qs today. I'm like, okay, what's our Friday splicing information? You know, it's showing us it in a unique way because it's relative, it's non-contiguous, but it creates these relative moves to each other. I was like, okay, statistically, it doesn't mean we have to comply with it today, but out of every 10 trades or 100 trades, let's say, 64 of them would comply and close above the last Friday's spliced close value, which would be 608.81. Out of 100 trades, 64 of them have been complying and closing above the last Friday's splice value. And that implies that we have to, of course, break above that yellow line we're being held captive to at the moment. So we've got, you know, are able to build a geometry into the top of this. And if you're trying to do this yourself, it doesn't have to be perfect. You just take that, since it's RTH to RTH, you just take that session's close and then bring it, you know, just close down into that area like I'm showing. It's not like, if you get a little bit above or a little bit below, like I never try to draw them perfectly in. I just kind of bring them into the area. You can see that it's good enough. So if we do run a 64%, that implies we'll be over the dotted green. Last Friday's close. Based on splicing data. And then we can further go out and say, okay, we know where our density of closes is for today. The likely area of close, the highest density is up here. So if we do break this yellow, we can say, you know what? They're going to try to most likely close here in this zone up here. So if we do break above, most likely close here based on density, based on where they're historically coming out at, traders. There's something interesting here. We do, again, have our white space right here. This is void of really any prior closes. So let me mark that. I'll just put like a little white thing in here. White space, you know, it's kind of just comes from a white paper, just like nothing on it. So we'll say our white space is void of any significant prior purple X. So that implies we have to skip over it. Let me add that, I guess. Or we don't have to, but implies that today, if seeking out the upper purple close zone, we tend to skip through this area. All right, so in a perfect world, let's say we do break the yellow, we do run to our 64% stat. It's not saying 100%, so that means that we don't have to comply. We could run that 36% stat. Run the 64, and we do get above the dotted green. Based on the historical density where we've been coming out at on the close, you know, we kind of skip through that area right there. We tend to skip through it, and then we tend to close up in that upper purple. Now, if we do run the 36% again, we tend to stay inside this lower purple right here. And you can see the market, they're chipping away. So I'm sure if you look at Milk's graph, what he's doing over there, see the buyers just kind of, you know, it's a process, kind of beating up on the sellers. So when they come in with sell orders, you know, they gotta get those sell orders, absorb them, take them out. You know, just, you know, it's a fight. You know, just keep going over and over, rehashing it, trying to get something going. And then if we think and we're like, okay, conceptually, you know, if they can get something going, they can, you know, keep elevating price. Conceptually, we're like, well, I look over here and we, you know, 64% of the time they have been able to overcome that on a Friday and move long. So yeah, it kind of gives a little bit of a bias, a little bit long. Just plain math, simple statistical math. Yeah, Milk's graph, like he's showing the spice day, it's just like kind of ridiculous. Again, because we're all in the same boat. You know, everybody's using the same data point. So imagine, like sometimes Milk shows these, you know, dollar trades, right? 300, 200. It just, you know. I mean, this is 40.11. Yeah, just, you know. He's showing the peak of 48.20. It's just crazy. For us, it's not too crazy. It's just kind of business as usual. Again, when we have Thanksgiving and stuff, you talk around. Sometimes I have friends, over, and family will be other people there. And then, of course, trading always pops up, the conversation of trading. And then, and then I hate what comes next. Oh, what do you trade? I don't know, just stuff. Let's try to be ambiguous about it. And some of them, they do come over to the website and they'll, look at the stuff, and I kind of get comments like, showing the OMM. So bottom got that rising red. Says the bulls are trying to, in control, trying to continue a rally, bullish rally. Milk is showing that 1246 risk, a 27 reward. That's like crazy. Good stuff. It's really good stuff. Oh, Isaac, you're asking about the 35 to 100? Yeah, so on any given trade, like Vector, when we pop through it, so we've found that, I found over time in real-time trading, that when we tend to move, like here, case in point, let's say we look at low, and we're at, let's say it's $1.15. If you tack on in the green zone, this is a buy zone, and here's a buy zone. This one's like excessively expensive. I just put it on for fun, but sometimes. So back when, was it Shop and Amazon? Back when they were, in Amazon $1,000 range, I would buy those $100 contracts, and they would really swing nice, But for most people, I wouldn't really advise that, and I don't know, I wouldn't really advise, I just show stuff for fun. But if you look at the green zone and you tack on 35%, we tend to get 35 to 100. So 35 is a minimum upside. So if we look at here, and let's say we're $1.20, if you tack on 35% to 100%. So $1.20 would be 240 at 100%. If you look at this dot, it's 254. So it's achieved the 35 to 100%. If you look at here, it's the same deal. If you come in here and say $8, 35%, it's like 2 something. So maybe up to about 11, right? So this one went up to about 19. So it achieved the 35 to 100%. That's just a general way of looking at the moves on the chain. Yeah, and uh, I guess I don't know what I read. Most option traders, are pretty happy with 35. Well, like
20 to
like
40 percent, 20 to
one
40
day,
percent, what they're happy with.
yeah,
They
yeah, and
jump
one
up
day
and
I was
down.
listening, and you know what, AVP? One day I was listening to this podcast, and these guys are like, man, if you can get 100% in a week, week over week, it's a miracle. If you can get 100% in a month, it's like a miracle on a trade. For us looking, it's like, eh, you know, it's fine. You know, yeah. Oh,
I'm just going to ask if you can we zoom back out? Yeah, there we go. I was going to say, I missed
yeah,
my
yeah.
yes
I'll
corner.
put it back to where I was.
I
I was
missed my
whining.
yes corner.
I was whining enough about everything. All right, let's see if I can get the screen back to the way it was. And kind of see sometimes creating these geometries like this yellow line over here, my 15-minute, how powerful that can be, knowing our anchor point. So we have an endpoint here, around the 507. So I drew my geometry into that. And you know how you were showing Darvis boxes a little bit ago, AVP?
Correct. Yeah.
There was a dancer, I can't remember, I think he was a Russian dancer, I can't remember exactly the story. His name was Darvis, and then I think it was in the 20s, 1920s, I can't remember. He ended up making a lot of money off trading, and he was just drawing those boxes, very simply
Mhm.
drawing boxes, waiting for breakout. And he just did it over and over and ended up coining them Darvis boxes.
It's just been too chaotic outside of trading. But yeah, it's been working beautifully, right? It's showing you where a better position is to take the same trade. If you're going to go long, you want to be, at some sort of structure that says, okay, and then kind of gives you a quick way to say, hey, you're wrong. And you can go back in the trade, but go at a better location.
Yeah, yeah, exactly. Isaac's talking about the yellow line. So I think what he's saying is when he gets to the yellow line, I would assume he's doing the put side. Because you can see the 600 on the put side when we hit yellow and we wick back down. We go from this line, we go up on that 600. Yeah, so yeah, Isaac. So the deal is 35%. So we come in here, we go green at 17th. So 35% of 17 to 100. So 34. If we got 100, we'd be up here at 34. If we get a minimum of 35%, then we're at 35%. So that's just kind of the norm move in that range. So our ES, the next spot is this 68, that 89.48 line. So when we seek out that, let's make that yellow. Mathematically, we've got a little bit more bias long based on the splicing. Yeah, so on our zone, our 35 to 100, when you get in, yeah, it's discretionary, right? When you want to exit. If you're like just trying to shoot for the bare minimum as you're getting to the 35, then you pull the plug. So Isaac, when you're looking at this, let's look at the bigger structure. So we're looking at the zigzag. So we come down, we V out here. I'm looking at this line. Now our zigzag's moving up. With the zigzag moving up, it's now telling us informally our orientation, it's trying to be long. Versus like yesterday, our zigzag was, well, this is a bad example. Yesterday, our zigzag was down overall, which meant the zigzag was up in the put. So to exceed the 100%, you're like, gosh, I wish I could figure out if I can exceed the 100%. What we need is for the zigzag to start to be this. And that means I'm just hypothetically drawing this out. That means if that's the case, if it turns into that, this becomes a low. So that'll transition to a low.
Can you explain what you mean by zigzag to Chris G?
Yeah. So zigzag. So if we're looking, there's a lot of things to the puzzle, right? And one is this zigzag pattern. See how it's zigzagging over here on the QQQ 1 minute? So we're flatlining here. There's a tabletop. And then see it's coming down, flat, down, flat. And then finally it starts zigzagging up. So it has a little V here, which is a hook up. And now we're zigzagging up. This is showing us that there's a contextual change in the market, that the bias is now long. See how it's zigzagging up and it's escalating? Remember, like, people will be like, oh, we're getting higher and higher lows. So that zigzagging is showing us we're getting higher and higher lows. So the lows overall are trying to work up and up and up and up over time. So when we're like looking And Isaac's saying, oh yeah, sometimes we go 35, we pull back, then we maybe surge. Trying to find a spot. We're trying to find the low, the spot. For confirmation, we've got to see this zigzag start to do this. And then that means on the left, when we had this basin occur, that could be the low for the day. And if that's, so let's hypothetically say this is the low for the day. That means that this has to turn into resistance for the day, and that we just came off the high price. So our zigzag is down. Now we'll see if we're going to get a contextual change, context change long, meaning that here, the put side, the short side, the context, the bias of the market's overall short. We're coming down, down, down. If it shifts, for argument's sake, let's say we just caught the shift, that implies this has to be the low and that we can exceed the 100%. So we have a limitation of 35 to 100%, and it comes from historical moves. We have that limitation. To exceed the limitation of the 100, that means the context of the market has to change. Instead of overall long, we have to be overall short. And then if that is true, if that comes true, then wherever we start this new context switch, this new up move, the zigzag up, that naturally became the low. And you can drive yourself mad by going into trade after trade, trying to catch just this zone. See here? It's like, let's say you're trying to catch the zone. We're coming down. Here was the zone. Unfortunately, the price was off the zone. In a perfect world, we go up, we loop through, we touch, and then start moving up. And then our zigzag pattern over here is going with us. In an imperfect world, we kind of come up, come down a little bit, and then keep zigging up overall. Right now, this zigzag pattern is stair-stepping up. So that means that, hang on a second. Hey. Oh, sorry about that. So what we're trying to do is we've got a contextual change here on the bias because we were down. And now see it's zigging up, zigzag line up. Vector zigzagging up, 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 up. Here, there's no change. We came down. So it's still, this zigzag is moving lower. It has not shifted to this, what I drew in. I'm just hypothetically drawing this in. I'm not saying this is moving up. I just drew this in to show the difference. So contextually, we're kind of over here zigzagging down. Flatlining. Yeah, Chris, it's just that vector pattern. I like to look at it, and I like to be. It's just another piece of information. If the buyers are starting to be in control, as we know, then we should get higher and higher lows. The zigzag over here is showing that factually. We are getting higher and higher lows. What we don't know is how long will that remain in effect. So we're getting higher lows. You know, we're coming up to the lunch period where AVP and I were talking about that yesterday, sometimes during the New York lunch period. Not always, but sometimes it can be a little bit slower. And we have to get into the afternoon session to, get something going sometimes. It's just kind of a rule of thumb, kind of making stuff up a little bit. But a lot of times, like when I first started trading, I think more so when I first started trading in the 80s and 90s, it was a little bit more that way. They had the specialists on the floor, and a lot of the times you could go into the exchange. So you could go inside, and they had the specialists. A lot of times, they were kind of taking it easy during lunch. Some of them would bring their lunch and be eating at their desk. Others would go out. Like I'd be over in the cafe. There was one kind of near the area. I'd be in there, and some of the guys would come over with their vests on and stuff. So you just have a little less activity on the floor. And now it's electronic, so I've noticed it. It's a little now. I've noticed it's a little bit different. I was worried about the decimalization. I was like, oh my god, they're ruining this market by doing that instead of trading in eighths and 30 seconds and 16ths and halves. But so far, I guess it's kind of okay. I think it makes it more noisy, though. I've noticed with the decimalization over the last 40 years plus, there's more noise in the market because I think there's more variability in price because it based on pennies. Because before with eights, you kind of had these hops going on, and now it's kind of like it's all spread out. So yeah, the ones that say closed, these were open states that are now closed. What's important to know about them, when we're underneath, so I'll start simply. Here's one that was closed yesterday or whenever. I leave them some on the screen. See how it became supportive? So we were, I was all babbling about, going to this. So we had this open line up here we started with, right? Then I wrote the comment. I'm like, coming in session. If there's an open line and we close it, we usually get a reversion. It's just the way the market mechanically works. So this was open. It's RTH. We do not mark it closed since it's RTH data. This gets generated by RTH. It stays open. The second at 9:30, we start trading and we're beneath it. We mark it as closed. So it was open, now it's closed. And all that means is I just use it for shorthand. It just means intersection of price. Since we are underneath it, by definition, we have now intersected the price at 9:30. So we mark it closed. The next thing to happen to look for is reversion. That means we go up and we confirm that level. We have to retap the level. In between there and where we're at can be a lot of stuff unfold. Like AVP and I yesterday were showing we had the same setup, exact same setup on ES, right to that line. AVP gave me the line, threw it on. We go right to the line. We have a near miss. We do not intersect it. So what do we say? the statement is we need to intersect, we need to overshoot ideally, and we need to confirm that line. That let us go out into the session later and say, okay, we've got to confirm that line. Same scenario today, open, we start underneath, that means it's closed at 9:30. We have to confirm that line. Could happen during our session. We're wave 25 minute. That means we're cycling through the session as we talked, maybe once or twice above the pivot line or more. So we come in, make the statement, and we draw our arrow. We hit that, and then it looked like all hope is lost. We go up, come down. We're like, oh my God, I don't know, Russell's insane. It's not going to hit that line. But where do we go? We go to our clothesline, which now becomes supportive. If we're above a prior clothesline, they become supportive. When we're underneath a clothesline, they become resistive. And they become objectives. So we're underneath the clothesline, or excuse me, above it, it does become an objective. So we go down here and touch this. Like months ago, I was showing NVIDIA, and it was just going up and down between them, like, just consistently. So we come down, that becomes supportive, becomes an objective and supportive, and you can see in hindsight that that is true. And then we move to our reversion. So we have a reversion. The market always has reversion. So then we go from there, we come up, we test our open line. So they're closed. Closed just means intersection. They have to be closed during RTH, since we're using RTH data. Our zigzagging the vector, we're coming in here, we're constantly moving up. There's these little hooks, but see the new platform, the new tabletop that formed. So we're kind of just generally moving up. This one's moving down. So it's compression. We're creating a compression here. The support is continuing to move up. The vector is resistive. Support pushing up on price. So it's trying to get us to break through what it's trying to do. So we're continuing to move that. This is continuing to move down. Now, by definition, this is considered a counter trend trade. And the reason it's counter trend is because our 1 minute's green, our 5 minutes green, or no, 1 minute. I'm confused. So yeah, 1 minute here and 15 over here. So our 15's green, our 1 minute's green. That means if we're taking short side, we're going against the predominant direction, which is long green.
Let's go two.
You can see on the counter trends, you can make money on counter trends too. You just don't want to stay in the trade too long. Because until we get a contextual change, like until this starts rising, it's just, you can see the effect. It's overall moving lower. And that OMM, kind of want to really pay attention to that because that bottom of the graph, it shows who's in control. User was showing a bit ago that, the buy side bulls in control, red lines leading. It's not, now that does not mean the price will be straight up. AVP and I were showing this over the last couple of weeks where we can have red line leading and we still have pullbacks in that. But the impulse up, the thrust, is favored to the long side. So pullbacks minor, and the forward impulse wave is, that extension is much more aggressive than the pullback. So until that changes, even though it looks ugly to the long side right now, until we can see a shift in that, that's overall long. And showing that Roblox. It's Roblox, yeah. Roblox. That squeeze area is standard dev loaded, like it's can really get going long. He's looking at SPY on OMM. Okay, so we've hit kind of a first set of objectives on it for the bull rally. I'll post them. Slide. What in the world? All right, let me draw this. All right, so hit the first. If we look left, we'll see there's a peak at our bull rally line. But I'll post it in. I'm just looking at SPY right now. And Eastern. Now, the last time this happened, we pulled back. We are pulling back. Then it surged forward. And paste it in. So we peaked into the, so I drew the red line. So we peaked into the red line on the left just recently. I circled it in yellow. We did that today. Same setup, same thing. Hit that red line. On the left, we pulled back. So we're getting up the pullback. Then we went back up to the red line and surged forward. So I assume Q's same deal. So even though it looked like the bull rally had ended intraday on the left circle, it was just a pause in the action. And then we were able to overcome that and move the bull rally forward. So have to see if we can repeat that behavior. If we repeat that behavior, that means we have not put in the high. The call side is still operable contract. And potential to get through the white space on the right. The possibility of that. Green, if you see what I did here, I didn't do it real good, but I put this line here. Zag over on the put, even though, you know, these counter trends can and do make money. So you can see our zigzagging is like that. Okay, so again on SPY, if you look at the graph, we look left because as AVP is mentioning with the boxes, right? There's a lot of repetition in the market. So we look left and I circled the place to look at on the left. So we've got two circles, the left circle, the right circle. The left circle is the prior behavior. Bulls maintain control. See the red? It showed that there was a pullback, but they still maintain control. You can see that after the pullback for the red horizontal line, pullback, then they move forward again. If that behavior repeats, and we don't know until 4 o'clock, since it's RTH data, we have to. At 4 o'clock, it'll become clear if it did repeat or not repeat. If it does repeat, and it's kind of a mirror of what happened the past day ago, we do move above that horizontal red line, and we do have higher highs in front of us. So it's all behavior. If the market has the same behavior we had on the left, then we can break across that. This is SPY, but on the Qs, it'll follow something similar. We'll break across that yellow line. If our horizontal line traps us, like we can't repeat what we saw yesterday session, I guess it was, then there we go. We've got the high in, and that's it. Bulls can't advance anymore. So it's really game probabilities. Can we get through the horizontal red line, or can't we? And here, see this tabletop, the prior plateau? When I drew this red line, I just based it on that, which can turn into a support area, as you see. We did come back down a little bit more in line with this one, but you can see that we had a reaction off of it. And
challenge. I'm seeing that on the OMMs, the green line wants to come up onto, and the red line is declining. So could change.
Yeah, could change. Yeah,
and we're stuck at the PML. We're stuck at the PML. Ceiling is coming down. Floor is staying stable. I think.
You know what I don't like about that AVP? When we get to the PML on our green line price,
Yeah.
man, sometimes we can coil up on that thing and we just hang out there, and there's no advancement, no real short, no real long, coil around. I like when it's a clean move through it, right? We hit that PML and we just go either up or down, whichever way, but we just do it and not just like hang out like it's at the beach. On the Q though, we're ricocheting, trying to ricochet off that PML. Trying to bounce off of it. The Q's at OMM, it's still positioned for bull rally. It's trying to seek out the next level. So we got to go higher. I'll post when I'm seeing. Yes. So our OMM says we have to go up. And I'll show you how we resolve that. Which AVP and I talk about this. If you look in the bottom of the graph, it's showing the bull and bear potential in a rally. And we just, again, very simple, we just look back left to where our rallies have been. And we bring our red line through them, red horizontal line through them. And I circled the yellow for kind of easy to spot. And if our red line, if our bull rally line, far right, yellow circle, if it's beneath that area, that means there's still more gas in the tank for the bull rally. So there's still more potential in a bull rally, implying that we've got to have some higher prices in front of us. So I did this at 12:03. And the time frame, you know, it's through the session, so it could be quick, could be slow. It's not really pinning down a time frame. It's just saying that the bulls have more capability for a rally in them in front of us from 12:03 on. All right, we're seeing the result of our graph where we have some more capability in the bull side, the bullish rally. So knowing that is AVP mentions it, the OMM, that just gives us a insight into the market that's just well, first off, very important. That lets us know that on these pullbacks, like here, with that structure, that setup where we're underneath our line, and it's just a visual thing. We're just looking back left and seeing where the rallies are coming out at, right? And if there's a gap there, like I circled far right, that means that there's potentially more rally capability in front of us, more bullish rally in front of us, implying that there's higher prices in front of us. And we know this ahead of time, which is key to trading. If we don't know this ahead of time, yeah, then it's not as fun. So looking at OMM, again, it's a very invaluable tool. I put in there at 12:03. So at 12:03, we know that because the red horizontal line is above us, that there's more capability in the move. Now, it's a progressive system. So we look left again, and if we can achieve, and AVP and I have been showing this over the last couple of weeks. So if we can achieve one red line, and we mark our next red line, so if we can get through that red line, we have the capability, doesn't mean it's guaranteed, but we have the capability to move to the next red horizontal line that we draw on, a rally line. If you look back left on the red peaks, we've got 3. Far left that exceeds a graph, I clip. Well, we've got kind of a smaller zone. I'm going to mark these kind of line here. We've got zones that are here. Got some peaks that are down beneath. I'm trying to look at the peaks. So we've got this peak. Hey there. Offline, I've been talking to Oak Moose here. We've got a 405. Let's change it to, let's see if we can go, let's see what 400 is. Change it to a 400. All right. So we're going to mark this as a potential support. All right. So I'm going to paste what we've been DMing about over here. If you look at that pattern, uh, wave one daily, we see the daily session represents a candle course. And we see the shadow underneath, the little underneath, so the shadow. It's telling us by looking at that visually that whenever we do carve out a low, we've been having reversion off that low. So we get long incoming off that low. We don't know where the low is. It could be where we're at. There's a case for that because we got an L1 and L1, and right now we're running an L2. We're back down at that low. Be that the market does use those prior lows on the left, indicate, okay, we're kind of around that zone. So I marked it as potential support zone, and I changed it to the 400. Now our vector on the contract.
I just want to point out, Russell, you're talking about Tesla. You know, for a second,
Yeah,
I'm
Tesla.
like 400. What the hell are you talking about?
Oh yeah. No, it's Tesla. Yeah, I'm sorry. I switch gears all the time. Yeah, sorry about that. Yeah, so we're talking on, we're DMing back and forth, and so Tesla, we got a case for maybe support, right there, and we've got a case that we get reversion, so we get off our support, whatever that is. If this is it, great. If not, it's somewhere else. But if this is it, we get reversion here. If that's our low. So market green. The one thing I do, well, there's a lot of stuff I kind of dig about the fractal stuff. One thing is we can create these data alignments. So we can see this stuff more vividly. I could come in there and I could see, yeah, it's low on the left. There's support for that in the market. And yeah, that could be a buy zone in there. So a little bit more information, the way we're laying our data out for decision making. Now, if playing it safe, so that's a level, may not hold, it may hold. If playing it safe, then the vector has to come down and we have to start getting a green signal line. We're still red, unconfirmed zone. We have an idea it can hold, but it's unconfirmed. We need a green signal line for more confirmation.
Now
So we
on
mark it.
sorry,
Oh, go ahead.
Spy is telling me, you know, hey, wait a second, let's think this over again. You know, you got PML tangled up with the red line, green line, and then same thing on the on the bottom, right? I think we're in for a little bit of sideways action right now because we're increasing on the volume as we naturally do throughout the day. And the red line and the green line are just lime green and red line are intertwined. PML and green line are it's a hard read right now. We could just go sideways in these balance zones, and then maybe eke out positive exposure somewhere as we get collapsing levels. It's hard today. It really is hard.
Yeah, definitely. Now, what I did was, AVP, see on here, I put a red and green band. You're like, where
Correct.
in the heck did that come from? And what that is. Okay.
That's what I
So
said.
all I did was, okay. Yeah, when the on the QQQ, the red and green line on the bottom, they came in and merged. And at that point in time is when I put the red green. Because if the red bounces off our light green, that means the bull rally kicks back in. And that becomes a support area. Yeah, and you're absolutely right with the entanglement. Getting all jammed up in there. I'm not going to say that Tesla has a 100% guarantee of working off that line, but it's kind
It's
of,
a great line in the sand.
it's a great line. I mean, if you have to pick a line, that's it. Yeah, and you and I both know when we have lines that are unconfirmed, they may or may not hold. It just like pick your lines carefully. I mean, Tesla's got a great case for having some reversion, having some long side step in. Hmm.
I was looking for sideways action, but this thing might go to the downside if we can't get it back above 58 here. What do you think, Russell? It he might have stepped away, or he's in a trade. You there, Russell? All right, Russell's not here, but what I'm seeing on SPY is the lime green line over the red line. Okay, so it's really tricky today because we could go a little higher on the lime green line, looking left, but right now bears are in control. We're under the PML line. Maybe we go touch the floor. It's quite possible, right? So just context is we're just kind of range bound here, but a little bit more probing to the downside, right? You're taking these balanced trades, right? Outside in. It's choppy. It ate me up a few times. I promise you, it's choppy. If you're looking at the ES box, you could see we're kind of chopping in between the purple vector and that open line. You get down underneath 58, then you'll pop up above 62, kind of get to 65, down a little bit above, but you're not getting much distance above 65 until it decides it wants to change its mood. We don't know what it's going to do. We just know what levels we need to pay attention to. Russell, I think you're back.
Yeah, I was here. I just set my
Yeah,
mic up out of the way. But if you look at, so one thing I was looking at AVP, it could be way off base, but this is kind of what's been happening. We get this funnel action, and I'll mark it up in the QQQ.
and then we get exposure.
So the floor and the green line have been tending. Let me mark this. So we tend to get this. Marking it up right now. It looks pretty consistent when this is occurring. All right, so this is the QQQ. I'll post it in the professionals desk. All right, so on the OMM, it seems like we have our floor and our green line, which represents price. We kind of get this convergence where they kind of come down and try to kiss. They try to meet up. And if that does happen again today, we never know until the session's done. Where are we at? 4,602.74. So we can draw this out. So I'm going to remove these. It's more plain. 602.74. 602.74. This is
AVP.
floor.
Hey, it's Antone. I agree with everything you said a minute ago, but we got to talk about private credit in a minute here, or at some point.
Are you
It's
giving
really
me some
starting
credit?
brewing. What's
Somebody
that?
got to mute him. your
I
mic's
said
on.
private credit. Goldman Sachs down almost 8% today. I mean, as much as I've been watching Goldman Sachs, it's never really down 8%, unless there's a true reason for it, if there's earnings or double downgrade or whatever. 8% a day is pretty big. Goldman Sachs.
here. Hey, Isaac. You're asking about the spread monster thing? Yeah, we can go over it at 4 o'clock Eastern, or kind of briefly. So I can see how to build the values, how I come up with the purple. And again, the purple, that's a it's just interrogating those purple X's. And for me, and you don't have to do it the way I do it, I just show one technique of doing it. For me, I kind of like to carve them up into zones. And that's just me. Because then I kind of have an idea of like, if I want to roll the dice and target a specific zone, like if I know where we're getting a lot of closes, a lot of density and close, and that's how my purple zones come about. I can, today started with the put down here in this zone, and really didn't. There was some pops and drops in it, and you saw they're tradable. It's not like for not, but that put only really worked well if we got to the top of this zone and dropped down below. And again, I put this comment in here. Not often does that happen. And you can go through and get a statistic on it. You can go through, you can be like, okay, we have 50 closes, 10 of them were here, 20 here, 30 there, 15 there. And that's fine. You can break it down to stats, 20% we land here, 15 there, 30% here. And it's, it's useful information. But I just put in just generally what it is. I'm like, oh, that's not often down there. And then if we have a bearish week, we're here. That means we're underneath the dotted green line. We close between this purple right here. And then as I mentioned, AVP and I are kind of discussing a little bit. The center of a range is always the safest area. So whenever a range is defined, like in case in point here, we have the purple. Hours ago, we drew out the rough center. It's just a visual thing. You don't have to be to the penny. And said, okay, here's center. So a center of a range is, if you think about it, it's like the middle, the median. It's the center, the average middle. Mean. And it's just a little bit more of a safer spot. So if the market went to close at the safest spot in that range, it would be in the middle of the range, assuming I got my range drawn correctly. If it's above the middle, it's more bullish on the range. Below the center, it's more bearish on the range, of course. So, yeah, it's the middle of the bell curve, basically. And sometimes within that range, so those X's, they're meant to overstrike each other, and they're meant to go deeper purple when they're kind of striking on top. So even within that range, there may be a little bit of an imbalance. There may be more closing prices. I didn't bother with that detail because I don't really care that much. But there can be more concentration of closing prices within that range. For me, it wasn't important to get that level of detail because over here, this whole process was driving our vertical put credit spread here. And we just need to be above this white line. So a lot, that the only detail that even matters here for the vertical put credit spread is this white line. So if I did the bare minimum in a graph and I just wanted to track where we're at, all I would need to do is put in a line. That's it. And drawing all this other stuff out just doesn't even matter. Drawing the purples don't matter. Where the market starts doesn't matter. It's just that white line for the put credit spread. Because the idea is staying above the white line, we dribble down into zero. So this put credit spread, if you buy in at $1.90, $1.90 or 200 or whatever, you get to keep the money if you let it expire today. And the idea is it expires today worthless. It expires at a penny. Yeah, that L shape. That was because I was just interested. We had a little more density of closes right there, implying that we've been closing in that little L shape, the little L part down down there more than anywhere on that purple. And you could see we didn't close down in there. We closed up above in it, which it didn't matter if it did close in there. It was just more of a interesting data point to capture. Now, it's not to say that that can be useful, because you could put on a bet that we're going to be above that area or in or below that area. You know, so you could look at that and be like, okay, I've got a little more confluence that there's been a little more closes there, and I'll try to target that area or above, or I'll try to target that area and below. So you can even carve it up. You know, you're just it's like placing bets. You know, what's more probable area. Right now for our close, of course, this purple area is more the most probable close area in here. Based on the way the system figures it out. Because we're underneath the dotted green line. Now, what I did over here on our Q 1 minute, see how I drew this red line? So I took all I'm doing is expressing volatility, and you can anchor it to any one of these data points. I can come up here and let me duplicate this, and then let me anchor here. So the thing is, you're just anchoring at a high data point. It's an expression of volatility long. Now, I pasted in the, I copied the graph into the professional's desk, and it's the OMM, if you follow me. And a few minutes ago, it's the one with the yellow triangles. So what I'm saying is, looking at OMM, like AVP and okay, so we're looking at what could be the resolution of the market. From now until close, what could the market possibly be doing? What's the most likely direction? You know, how's it moving? And I went back to the left and I said, okay, you know, based on being underneath the red PML line, the green line represents price. Based on being underneath the red, we tend to compress. We tend to try to intercept the floor. So that means we know that there's a margin on the floor. So that's my gray box here. So this is floor margin. And let me put that in there. So this is the floor margin. In that graph, looking it over on the left-hand side, we've tended to grind into the floor, and the floor has tended to, you know, try to kind of move up in some cases here and maybe meet us halfway. But in any case, the structure here, based on the market maker, the OMM, is that we're kind of coming into a pinch point. We're coming into that beak that I drew on the far right-hand side. The red lines represent that. So the red lines represent the yellow. And then we've got the floor down there, and I added the margin. And the floor here's ascending. It's coming up, of course. But we've tended to, with this structure, meet somewhere down there. And until it changes, that's just kind of what it's been doing. And again, with everything we do, it does not have to repeat. You know, it's not that it's locked in absolutely. It could deviate. but that's just what it's been doing, and this is what makes trading hard. We're like, okay, so we've been repeating that. If we've placed bets based on the green line and the floor getting near each other, it's tended to work out. It's tended to be working out the last 3 times. Will it work out for the 4th time? You know, every time you go into a trade and you're looking at this, it's like, will it work this one more time or not work this one more time? We're trying to bounce off that center of range that I put in. So that's always the question. That makes trading so freaking hard. It's like, okay, do we get the trade to work one more time every time we go in? So when I carve up those X's, I don't specifically look for 4 zones. I just look for the density of them. So if there's kind of like a bunch of X's together and it makes sense to make it be one zone, that's what I do. And then if I find another grouping of X's and it makes sense to make another zone out of it, that's what I do. If you're doing a put credit spread and like that's all you care about, you know, every week you're like, okay, I like the idea of making 200 or 400 or 500 or 1,000 or $2,000, whatever. If you like the idea of a put credit spread, all you need is the line. You know, you don't need any of the zone. You don't need any of this stuff. You just need to drive that white line or whatever color you want to make it. But if you want to create your zones, because you're like, okay, I like the idea of put credit spread, but I'd like to also trade the targets, then yeah, you can carve it up into zones. And you can assign them percentage, like you can, you know, you can eyeball. It doesn't have to be perfect. It's just, it's trading. So you can eyeball it and be like, okay, we get about 30% action here, 30% here, 50% here. Just by looking at the X's, you know, you don't have to, like here, again, I just describe it vaguely. I say sometimes it closed down here on a mildly bearish week. And that triggers me to be like, okay, if we're under the green dotted line, which is last Friday's close, that would be considered, in that context, a bearish week. We would be having a bearish week right now, because we're under last Friday's close. So I just put it in that context. If we're underneath the dotted green line, you know, this is kind of the area we'll come out at, most likely, in that purple. And if it gets really ugly, you know, something's going really bad, then, of course, as we talk, we can be in this lower purple area down here. And, you know, so far, and this is, again, this is Allard. This is not very often down here. So again, if you're trading, if you're putting on a trade and wanting to be down here, you'll have a lot of failures. If you're putting on a trade and wanting to be above the white line, you'll have a lot of successes. Because all I do is go into the spread monster thing and it's carving this up for me. And it's figuring relative positioning. So while indicators and stuff, they don't care necessarily about the cycle they're in. But in Spread Monster, it does. I was marking up earlier in the week. We have these cycles up and down. It's figuring out, based on historical information, where we're at in the cycle. So this white line, all this stuff can vary greatly from week to week or day to day whenever you run Spread Monster. You can do it across a day even. You don't have to do it on the week. I was just showing on the week. Or you can do it across 2 days or 3 days or 4 days. I was doing it on the week just because I was letting this, I wanted this to expire worthless. So when this expires worthless, I got to find my line down here. Because by default, we have 2 styles of trading. Pretty much in any trade, there's only 2 styles that come out of any trade. And first style is you're going
winning and losing, right? Winning and losing.
Nah, it's actually different than that. Yeah, so everybody's like, so I was trying to explain this to Luke was asking me about some of these spreads and like, how do you do this and what are you looking for? And I'm like, okay, think of it this way. When you step up and you put on a trade, okay, think of it like a spread. You're either moving to a point or moving away from a point. That's the only way a spread can work, right? A trade too. You're either moving to a point or away from a point. Now here on Tesla, these are the hardest trades to do. They're directional. This is a long call. You know, the odds are against us of it working. We're already breaking support. But this idea of a trade, this thought, this concept of a trade, it's only profitable if we're moving away from a point in our chosen direction. Our point is our line. It's going to be either the vector, this line, or whatever. We got to be moving away from it. Moving away from this makes us be profitable. Now, if you take an iron condor, okay, with that in mind, if we're moving away from this white line that I came up with on Monday, and we're going away from it, allows us to be profitable. We have to move away from this white line. We got to move up. So our structure is we've got to move away from the white line, up and away. Now, if we're doing an iron condor, we're doing the opposite. We want to be moving to a line. Like we want to be moving inside of a line. We want to be moving to the center of that line. If this represents an iron condor, this middle is the best spot for us, as we burn this side and we burn this side. So imagine on Monday, and I could have done this. Let's say we rewind back to Monday. And I'm over here babbling about this solid green and this red line, you know, it represents outliers. Somehow Spread Monster figures us out. So let's look at what this entails. So again, on Monday, like, okay, an iron condor has a shoulder. We need to be moving towards something. We need to be moving towards the center. We need to be moving away from the shoulders for it to be profitable. That means if we can magically figure out where these shoulders are at on Monday, you know, pre-trading, so we have an idea, we can be profitable in an iron condor if we can somehow magically come up with those numbers. So we've got the red dotted line, which is an outlier short. We've got the green solid line up above, which is an outlier long. If you look at an iron condor, and if you look us moving to a point, this center point is the green dotted line, which becomes a table. So we have, you know, a shoulder up here on the green. We've got a shoulder down here on the dotted red. We've got it mapped out in front of us. So we know where the constraints are of that iron condor. We know the long side constraint. We know the short side constraint. So we know inside of there, we can burn up premium. So we're moving to a point. We're moving, and that point is being inside the green and that red. Versus this is moving away from a point. It's moving away from a line. So Luke's like, he's like, well, how do you figure out which one to pick? I mean, it's like, okay, so we're Monday. How do we know to pick iron condor? How do we know to pick a vertical, like a butterfly? You know, it's like, what in the world? How do we know what to do? And that is, you know, you've got different vehicles to, you know, capture these moves. If the iron condor, and the iron condor is just based on these two areas, if the iron condor it's just a choice. Like, oh, I'll pick iron condor because the way Spread Monster works, I have a great degree of confidence that we can be encapsulated within that zone for the week. And this week is very telling, it's like, wow, it is capturing the zone. It is finding the outlier. The purples are defining areas. You can you can see it expand. You can see it go at that idea. The credit spread, you can see that idea. You can be like, and you and I, AVP, last week we had the same thing. Came down here, explored the white line. We moved up off the white line. This week we explored it for a little bit longer. We're down there a little bit more, exploring the white line. But then we moved off the white line. We really haven't visited it since. So again, we're moving away from case. We're deciding we're going to move away from the line. We're going to price expansion needs to be long, any bit bearish. But we could have as well picked an iron condor. We could have figured out our shoulder areas and played that as well. So it's just kind of like what somebody, really it's a choice of what somebody wants to do. It's not that the system says, oh, do an iron condor. And yeah, the system, it does have the capability to, it'll like figure out plays for you, throw them out there. I don't have that connected in yet, but can do that.
But let's just break it down to a very simple thing, right? Selling spreads is trying to figure out where the price isn't going to go and then sell the options there. So just ask yourself the right questions. Hold on, I've got to take this. I'm sorry.
If we grind into the floor margin, if we have that move in our favor, then the put side works.
Sorry about that. Today's just been one phone call after the next.
QQQ is over here in the panic room.
Sorry. But what I was saying about spreads is basically you're selling where you don't think it wants to go. But there's a caveat. To get the most premium, you want to kind of touch it, if that makes sense. So that's why the milk spreads pay so well when they win. And that's what you want with this. Early on in the week, you give it your selling time. Okay, so they're paying you for time. And then you're selling distance. The closer the distance to your strike is, the more money they're going to pay you. It's as simple as that. Now, what's the basic concept of selling versus buying? If you buy an option, the price has to go up. Okay? And it doesn't have to just go up a little, it has to go up substantially, right? Or else you have to cover your premium. So if you buy a 601 call for $1, well, it's not good enough if it gets to 601.50 At the end of the week, yeah, you can scalp in between, but truly you need to get to 602 just to break even, right? So there's only one way to win, okay? With spreads, there's three ways to win. Let's take our 601, 599 spread in example, okay? If the price goes above 601, we're a winner. If the price goes sideways above 601, let's just say it goes to 601.10 to 601.50 the whole week, just sideways, nothing, right? What happens to your options that you buy, right? They die, right? Well, that's exactly as a seller what we want. We want that premium to die, okay? And what's the third way we could win? Well, it can go against us and we can still make money. For example, I got 201 on my spread. Some people got a little less, some people got a little bit more, but let's just say you got $2. Price can go to 600 and you'd still make $1. Why? Well, you lost $1, okay, on those 601s. However, you got paid $2. So therefore, you gave back half and you still kept it, right? You can go all the way down to, okay, 5.99 and a penny and still be green outside of commissions, right? So this is why it's so powerful. So why do you lose? Why is it dangerous? Well, because you don't really get paid a lot unless you're right in the thick of it, right? And that's why I like the milk spreads, because you really only put it on when you're in the thick of it, right? And that's why we like dipping underneath the white line, because you're getting paid to be in the thick of it, right? You could be 2 points above the white line, okay? And I did that. I opened it up at the open and I paid $1.15 for it. When we got underneath the white line, those went up to $1.75. I had adjusted ones, 5.99.94s, right? Um, so I had multiple ones on, right? So that's the difference. And I hope that explains to you why we like dancing with the white line on a Monday, Tuesday. We don't like dancing with the line on a Wednesday, Thursday, Friday, right? And I showed you guys that if it works out well, you were done on Wednesday. You were done on Wednesday. And if you were done on Wednesday, Thursday you had a chance to get in. This morning you had a chance to get in at decent premium, $1.20, right? And it's at a nickel to 7 cents. And I'm begging you. I know you guys are like, oh, it's going to expire worthless. Close it up for a nickel. You don't want to ever be assigned after the market because of bad luck. Okay? I'm just telling you, please, 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 at least your short side, close out, right? Uh, it's just not worth risking a nickel for nonsense, right? If you guys got any questions, put them in the chat, and as I see it, I'll try to answer it. Specific to selling spreads. And you should be fine. Did you want to unmute yourself? Try to unmute yourself and let me hear.
So if we get down near our floor margin, then that on OMM for 4 trades is 100% win rate. We'll see. There's still a lot of time left. Quite a bit of time left. Yeah, and a condor, like ABP is saying, the best thing is one side or the other. So you put one leg on one side, and then the other leg on the other side. So when we're at the solid green line, that's the call side, and then when we're at the white line, that is the put side. That maximizes the gain.
You won't believe what kind of day I've been having. Let me just shut this down. I've been like right and just poor execution today. I'm finally green. I had to work hard today. Russell. Some days, OMM says
Yeah,
bullish, I go bullish, I stop out. If I didn't put
yeah.
stop sign like I usually do, I'd have been fine. But today, I had to work. I had to work just for a good steak dinner. And Milk
You
is in
know,
the
it's hard.
corner saying that's because you wanted steak. That's why you had to work so damn hard. If you wanted a plant vegan burger, you'd have had millions of dollars today. But it was a hard day for me, to be honest with you. So everybody, it's I can read the market, but playing it is another emotional bit about it. I've done 100% on my spreads. I'm very happy with my spreads, but today I got chopped up a lot today. You know, like
Yeah.
I was playing the 62, and then I get tapped out at 58, right? The purple line, right? And you kind of got to be disciplined and you know.
Yeah, that's why one of the things that's very easygoing is like this put credit spread.
Yeah,
'Cause I
yeah.
know
I
not
had a guy.
everybody has time to sit in front of the monitor like us,
I had a
and
guy, and you know him very well. I know I'm not going to call him out. And he said, "Why the hell am I doing all of this when we can patiently with OMMs understand this and sell, now person has a larger account, 20, 30 contracts for $1, right? And call it a day. Call it a day. Sometimes you get it 2 times, sometimes you get it 3 times, and call it a
yeah,
day, you know? And
yeah.
people don't realize how powerful 3 grand is. That's like $720,000 a year. Come on,
Oh
who the
yeah,
hell knows that?
yeah. Just kind of taking it easy, not really trying to be,
I, don't get me
superhero.
wrong. You can sweat. You sweat sometimes. You do. You do. But you know, I think it's really really powerful. It's really really powerful.
Yeah, yeah. Knowing where we can end up over here is with a high degree of confidence is quite a thing. But and there's also a fun thing to trading, right?
Yeah, you have
Like,
to.
trying to beat the system, right? I mean,
Also, like it's like gambling in like casino, right? There there
yeah,
is there is that whole emotional spectrum when you trade, right? When you're winning, it's like, oh yeah. When you're losing, there's a mild depression coming in.
yeah, yeah. You're like, holy crap, I'm so pissed off. Yeah, you're just like, oh,
Right? You're winning. You're like, oh, I just made a mortgage payment. You're losing. Like, I think I'm going to be eating, peanut butter and ramen for the next month. Not that you're actually
Yeah.
going to do it, but your mentality goes that way. And
Yeah.
this is the key thing about trading, right? You have to just define your risks. And once you get that edge of house money, and when I used to play blackjack, right? And I say used to because my wife convinced me it's no longer in my best interest with her shopping habits. We have a deal. If I go to gamble outside of the market, whatever my daily allowance to gamble is, let's say it's $1,000. Well, I'm going to give her $1,000 to shop, right? That's just the way we work, right? So she got me out of playing blackjack. But when I used to play blackjack, right, the whole simple basic logic is when you're up like a couple of $100, and you win, you take a big chip off and you put it in your pocket, right? Don't even look, right? You play again, you take a chip, put it in your pocket, right? And you keep doing that. And then all of a sudden, you lose, and then you go in your pocket, and you're like, holy cow, right? And then you're like, okay, I'll take two chips out, right? Maybe it's $200 chips, and you'll be like, okay, I'll play with that, right? Same concept with the market, okay? At some point, you gamify it, okay? And what I mean by that is you're trading these spreads, okay? This week you made $200, right? Good. Put 100 away. Put 100 away, okay? Go trade again. Make another $150. Yeah, put $50 away. Keep going, right? When you put that away, when you get to like little resets, right? So if you say my risk is $300 and you put aside $300, you've got a full reset on one contract, right? If you've got 10 of them because you made 3 grand, right? You've got 10 times to reset. The odds are you will not lose 10 times in a row. I don't think you'll ever see that on a weekly spread trade like this, right? And then afterwards, when you have these now 10 lots that you can trade, you can say, hey, you know what? Today I'm going to do 2 lots and I'm going to start trading 2 lots. And then eventually you let the money come in and you go and trade 3 lots. It takes time. But I kid you not, I knew a kid that I mentored selling spreads, did better than me, because he'd let them go to like 10, 15 cents, right? Where I would cut out at 30 cents, 25 cents. And he started with $500, right? He had 1,500, 3 resets, right? One contract. Took him 2 months before he got to like 2 contracts, right? But then it started to accelerate. 2 contracts led to 3, led to 4. It just accelerates because you get a couple of good wins, okay, with $500, 5 contracts. You're making $1,000, right? That's 3 resets, 3 contract resets, okay. So now if you're playing with 3 contracts, great, got zero risk, plus $100 on the side, right? That's how you gamify, right? And you'll hear Milk often say, bullets, right? How much ammo does the buyers have? How much ammo does the sellers have? Where they're shooting their bullets and things like that, right? Um, that's the gamification of it, right? And then the really good traders, they start thinking in time. Okay, the average person in a metropolitan city needs about $200,000 a couple. Okay, 200 to $250,000, right? Okay, so if you can put aside 250 and then you put it into something that's just produce shedding income, right? Well, guess what? You just bought yourself a year of hiatus. You can do it again. Well, now you bought yourself 2 years of hiatus, right? And then eventually what happens is you can put aside enough that the income that it sheds provides you the free time in itself. It's not that you don't go on with your life, you still work, you still do things, but you have a choice. And that's super, super important. And for you young kids, now's the time, okay? maybe you don't go to one concert. You take that $100 and you put it in your IRA, and you put it into something like a, QQQJ or a QQQM. You forget about it. Just forget about it, right? Come to, Russell and my age, you're going to look back at that same damn thing, and you're going to be ecstatic. Ecstatic. In fact, I'm going to do one thing, just so you guys kind of get an understanding. Take $100, okay, and you put it in QQQ 45 years ago, and you dripped it in a Roth IRA, right? What's the value today? Let's see. Okay. Even AI doesn't like to think fast. Damn. Is this slow?
Yeah, we're almost touching the thing.
We got our end of the day values as well. I like the dip and pull back, to be honest with you. I want to see them hit the floor. Swear to God, Gemini sucks. Should have used chat. Oh, there it is. Okay. $100 price. So you would have had two shares. Two shares is what you would have had. Okay. Your total value of that 100 is $1,400 today. Okay. So you didn't do anything. You put $100 away 25 years ago, and you got $1,400 in exchange, right? That's a 1,300% return for doing nothing. For doing nothing, right? $1,000 is $13,000. $100,000 is $1.3 million. You see the power of compounding? Here's a funny stat, Russell. You're gonna like this. You and I both know this. If you had put $100 every month for the last 25 years into your Roth IRA, you would have put 30 grand in, okay? And you wouldn't have put it in.
Yeah.
The spreads would have paid for it. That would be worth $215,000 today. Okay, so this with a little bit of financial education can be the difference in a 20-year-old's life, 25-year-old's life. You know,
Yeah. Yeah, definitely. Time.
time is powerful.
Yeah. Yep. Time is super powerful.
How many people think you think took our spread? Well, your spread. Think 100 people took it this week.
I'm not sure people like understand him very well, to be honest with you.
Let's see how many people we have in Discord today. We got 1, 2, 3. Do we have a count on this thing? Yeah, 34. 34, right? I think at least 50 people took it. I think during this week, I think at least 50 people took this spread. You know?
Yeah, I know a couple of people were asking me about him because they were actually getting in them, and they were
Yeah.
asking me some different things.
Yeah.
But yeah, not everybody always says stuff, of course. 5, 606, 78. All right.
I told my kids I'll cover the loss, but they have to do it every week now in their accounts in their Roth IRA.
Oh, the spread trading. Yeah.
Yeah.
Yeah, it's like, kind of no fuss, just kind of like not a lot of management to it.
There's always going to be that little bit of the risk reward is there. 2 to 3 on a spread. That's a great risk reward. It really is.
Yeah.
And then
You
you're here
gotta, for
every
that
day. You're here
Yeah.
every day
But
managing it, right? Tell me. I'm sorry.
yeah, I like them to spin down, 606, 78. I like them to kind of spin down to that 0, but there's always risk, because as we go, what if something really bearish pops out, something just
If you win 2 weeks in a row, you're good for the next week, and you're good
yeah,
as long as you don't change your size.
yeah.
You know?
Yeah, and that is one issue. People getting like a little too cocky on it, right? Like, oh, last week
Yeah,
is a win, this
yeah.
week's a
Don't
win, we're
don't
going
size
to
up.
0.
Don't
Yeah, you
size
don't want
up
to.
yet,
Yeah, you
right?
don't want to be jinxing it.
This is kind of why I didn't want you to mention, legging in, right? Because
Yeah.
well, let's
Oh
let's be
yeah.
honest. Let's be honest. You and I could leg in. We could split them, right? We could build boxes inside boxes, right? We you could box it out. You can build them inside, right? You can also turn them into a jade lizard, right? Both ways. There's so many ways to be defensive about it, right? Or
Oh
offensive
yeah.
about it. But these exotics, they're not for the lighthearted. Okay, every time you alter your initial position, there's risk that you can actually create a no-win situation. So it's important. It's important that you just take it easy, and sometimes you take the L. I took the L so many times today. I can't tell you stupidly on ES today. It just wasn't my day. I read it like I read it so perfectly, right? I showed everybody else here, play it from here to here, right? But when you step up to the plate, sometimes stuff happens. Somebody called me, I hit the wrong button, I got sensitive, right? I held pain, and then when I was ready to be rewarded, I choked up too quick. Things happen. Things happen. I'm just glad I'm green for the day. I'm done with ES. The only time I'm going to touch ES today is if we hit a ceiling or a wall. It's a planned trade of mine. I've set money aside to lose for that trade, so I'm okay with that. But
Yeah.
some days it's just that the OMMs were great, but it says bullish and then it pulled back, and then it says bearish and then it jumped up. It got the better of me today. It really did. It really did. But it's okay. I'm green. It's a blessing,
Mhm.
and
Yeah.
and, uh, and it took a substantial amount of effort to be there.
Yeah, it's trading's a job,
It
you know.
is. It is.
A job.
110%.
I have a lot of people that I know or family, like I'll say, and they just seem to think you walk up to the plate and you start collecting money. Like, well, Russell, you make it look like it's easy. It's like, it's like, no, it's not easy.
Hey, it's Anton again. Like you were saying, Russell, I kind of with the whole thing with learning the market, I kind of compare it metaphorically to like going to the gym and trying to get abs. You're not gonna go to the gym once and get abs right away, right? It's a long process. Same thing with making money in
Yeah.
trading. I think you would agree.
Yeah. Yeah, it takes work. It's
Russell,
not
Ed's
like
one of these young guys, right, who needs abs. We're married men. Abs. Who needs
yeah,
abs? We don't want no
yeah,
abs. They're a
yeah.
liability.
Oh
I
man.
come back on the chips and stuff, I was like eating horrible. I'm like, I can't be eating trash all the time.
Oh my God. I'm
I'll
just
tell
playing
you,
with you, Ed.
Kennedy's trying to clean up the U.S. food. Our food, I'll
Oh,
tell you, it's not
Yep.
good in the United States. It's not good.
Mm-hmm.
It's not.
you're gonna find this hilarious, right? I had a business inside a resort in Florida, right? And a South American company came in to manage it, and they're like, okay, we want to convert the gift shop into a grab and go and the gift shop, right? I'm like, fantastic. We'll order muffins from Cisco, and they'll last us 4 days. And the guy goes, what do you mean 4 days? You got to throw them out the next day. I go, no. You got a 7-day, 8-day shelf life on them. He goes, well, they're looking at each other like I'm on drugs, right? Like, no, a muffin, you don't sell it today. It goes in the garbage at the end of the day. You get new muffins. I said, no. They last. The whole meeting stopped. Okay, high level executives of a freaking management company, right? And they're perplexed at the fact that food doesn't go bad at the end of the day. That there's so much preservatives that they would last
Yeah.
a week to 10 days. You know,
Yeah. 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 Yeah.
we eat
Yeah. It's
garbage.
great.
We eat garbage in this country for the most part.
Yeah.
Mm-hmm.
Yep.
There was a Periscope question that I'd like to direct to you, Russell, if you have the time for it. Kind of simple question,
Yeah.
but I'd like to get your answer on it. Someone asked, how accurate is Periscope for the short term? How would you best answer that?
Yeah. So all it's doing is finding the floor and the ceiling,
Mm-hmm.
finding things that can be undervalued. Now, the options, it's, the market itself, right? 80% are decaying. So that means in Periscope, you can look at it two different ways. One is you can look at it as selling a premium. Another one, you can look at it as buying a premium. So when you're in there, you can be like, oh, I want to sell premium against these things because I don't think it's going to have the move. Or you can buy premium and go with the direction. So it goes either way, and I know I don't really I used to show a little more like Avgo. Avgo was high flying. And then I moved the stream over to a different Discord, and
Mm-hmm.
so it goes both ways. There's also a few other components that go in Periscope that we haven't gotten in there yet that we need to get in there. So we need to see if the volatility is compressed on Periscope. Like it needs to pair with that. That helps people that want to do plays directionally off of it.
Mm-hmm.
You'll go in there and you'll see like sometimes the thing looks genius. It's like, oh my God, 500%, 1,000%, 2,000%. And generally to get those, it's a Thursday, Friday type move. So when we're getting these outsized moves in Periscope, usually it's the last, bit of the expiration. And not to say we can't get moves up front, and I've traded moves up front too. But to get radical moves, that they tend to be on a Thursday, Friday. And if you, so there's a lot of stuff to do. One is to do splicing. So like, let's say we take Tesla and we splice, and we find that odds tend to overwhelmingly be on a Friday. Let's say they overwhelmingly tend to be short. You can go in Periscope, you can set the put side and look for what it's coming up with on the short side, the suggested moves. Same way like Tesla, maybe on a Friday or a Monday or Tuesday, whatever you're splicing on, maybe it shows there's overwhelming odds for a long. So you can go into Periscope and then look at what's coming up long. So it's meant to just help with picking selection of contracts. It's tuned to the Friday and used in conjunction with other things, because that's kind of how I do it. I'll just look at, I like splicing a lot, honestly. You'll still see Milk sending it out very religiously, because it's showing us relatively how price actions moving in a unique way. We're seeing stair step up, stair step down, seeing odds from like a Wednesday to Wednesday, a Tuesday to Tuesday, however you want to look at the data. And that can also help define which way in Periscope. If you go in there and you're like, okay, I want to look at reversions above PML, you can do that. or, you know, if you want to see, if we're above PML, you want to see reversions under PML. Like right now, I believe, let me check real quick. I haven't checked today. I think that composite, we are, so I look at the 2021. All right, so NASDAQ composite still overall short. That means in a general sense, when going into Periscope, you can look at the short side. And I say that because when I look at wave 20 daily on NASDAQ composite, we're still underneath the vector. We're pulling back down under the vector. I'll post what I'm seeing. So if we looked at Periscope, then knowing that we haven't successfully broken out of the vector, and you know, this is what's hard. Like maybe on a day we go up to the vector and then we think, not that it's showing this, but we think it's going to get through the vector, even though it's underneath and it's showing it's under. We have to be proven wrong for it to get above the vector. But if it's under the vector like that, then, you know, we tend to have a little more potential short. So if I go into Periscope.
Wow. That was a clear rejection on that picture you just sent. The price and vector. Just gapped
Yeah,
away
it
from it.
was. Yeah, it just totally pulled back. I don't think I've sent this out in a couple of days. I know from, you know, when I open up 1,000 days in NASDAQ composite with the 20 daily,
Mm-hmm.
you know, I know for any shot at a rally, we've got to be above the pivot line. And then we have a shot at a monster rally coming in. And I know if we're underneath the pivot line, you know, we're short. I mean, the system's showing, okay, we're in bearish territory still. And it's hard because sometimes I want to project what I think it'll do when it's showing me that's not what it's doing. Because the worst trades I do, I swear to God, I think it's going to break above the purple vector. It's not through the vector and it's up there, you know, rejecting from the vector. But for some reason I get it in my head, oh, I just know it's going to break over, you know, break through it and it's going to get on the pivot, you know, but, and if I look at it
100%.
objectively, it's not showing that, you know, and it's like, it's hard to get past. Case in point, like, so user 321's end of day projections, they're up there. And, you know, it's like they are what they are. That's what it's showing us. You know, but, you know, sometimes getting over my own stubbornness can be hard sometimes. Even though I do this stuff, I've been doing this stuff for eons. It's like, I don't know, sometimes I get, that's why I not try to pay attention to the news and stuff. I don't want it making me all foggy. You know, it's like if we have end of day projections up there, that's where they're at. If NASDAQ composite showing we're underneath the vector, now we did attempt to get over it on the left unsuccessfully. We had a green session. But this helps me with Periscope too, because I can, if I look at it objectively, like, okay, we're underneath the vector, let me look for short side plays. You know, it's just, I'm my own worst enemy at times.
You and me
You know,
both.
it's, yeah, it'll be, you know, it's
There are
like
days
you
where you can
said.
see it clear as day, right? And there are days where you know you can't leave. You can't. It's right in front of your face, and you can't see it, right? Because you get in your own
Yeah,
way.
yeah. I've noticed too when I'm tired, if I'm real tired, I notice too, then that's when I really start making mistakes. If I'm
Oh
real,
yeah,
you know,
same.
for whatever
Read
reason.
the
Yeah,
fractal wrong when you're tired. I've done it.
yeah, yeah, it's tired. Yeah. Kind of casually look at stuff. Yeah.
I bought that
Mhm.
NAT, Anthony. I bought that
Oh,
today.
really?
Yeah,
With
you
the
know,
spread
I'm
or
not gonna
stop
pull another Zim. I'm not gonna pull another Zim. I just threw it away. I only bought 100 shares. It's not nothing
shares?
crazy.
Okay.
Yeah, I just bought 100 shares. I said, forget about it, right? You know,
Well, you obviously like
what
the
if it's
company
some
then,
profit? Nah,
right?
you did the research. We talked about it,
Yeah.
and said I was going to do it either way, right? And I'll double down or triple down when it gets down lower, right? I drew it up
Mhm.
and I said, hey, you know, I'm going to use profits to buy it. But look at this, damn, Russell. I've been playing this for like 10 times, stopping out, right? And look at this thing go right now. Just when I said I was green, I stepped out. I stepped out. You know. Oh,
So
look at
see,
this.
so here's uh see that little yellow block I drew in right there on the
Yep.
1 minute?
Mm-hmm.
I put in this yellow block. All right. So how I knew that, like I've been posting it in the desk. My yellow blocks.
How'd you know 605? Right. That's what I want to know. Did you just take the trajectory of
Okay.
that
So
vector?
so y- yeah, so the first step in the process is I want to see the spread, the distance between the floor and the green line. Green line represents the price, and of course the floor, represents the volatility down there. So I want to find out how far we encroach on the floor, because that means it's a support point. So that little yellow box that I drew in is the support point because
That's
we
the
were
difference between
encroaching on
the
the
price and
floor.
the price and the floor. Correct.
It's
That
the
box.
differential between the price and the floor. Yeah. Now we don't have to be perfect. It just needs to be good enough, right? So that's pretty good.
Yeah. Yeah.
There. I need to know where we're coming into the floor. Okay, so that's step one. So that's what I did. So I was tracking this in the background so I could know what to do. And when coming into that yellow box floor, I look back left. I'm like, okay, that's good enough. And here's where I drew it out right there. So that means, by definition, that all things holding, this repeating, that we get a bounce out of here. If we get a bounce out of here, we should go green. The call should go green. Now, with that in mind, I want to know where my resistance is at. And the way I do that is I just find my high volatility back here and my low volatility here, and I draw my yellow lines right into the blue. So I know a couple things already. One is I know here can be a peak, here can be a support. If I can break the yellow, because this defines a geometry, and look how it was acting here. You see that little rub against it? So the market knew that. It also knew that. Right there, we know we can stammer. We can stall out potentially. And if we can break through, we can run to the ideal location is here at the top of the blue. And if we get a home run, we will move into the variance. So we can move up to this purple line. So on this call, if we can get a home run, just really something great, we can break above here, the user's levels, and we could run to purple. We could run into our 1-point variance. Now, okay, so we need to mark, this is already, we've met the minimum, and the minimum move would be to the ideal minimum move would be to the 606.78. So we have achieved that. And that's like right in here, I think. So here's 606.78. Go to the top, 606.78. Okay. So if if trading just the projections breaking out of the yellow, that 211 is kind of the trade right there. If we can run hard, then the next spot would be the purple up there. And that gives us the ES up here to the clothesline of the 68.89 area, if we can run. I don't know if I'm answering any questions, but it's just progressive. It's like we have to break here. Once here, we have to probe, break, and then run to there. And if we look over here, we've got another, there's just a host of issues. We've got another issue here. We're up at the top of our closing zone. So when I looked at my X's, to me, that was the top of the X's for this closing zone today. So, I don't know. It's kind of falling in line with users' top of her box right there. So, oh yeah, it's a lot of work because I gotta pull the OMM, and then I put it in paint. I'm checking my yellow space, my variation, then I'm tracking this, and then I
while you're
the
trading.
605 and yeah, and while I did the 605, see the 604.77. So remember, in any range, the middle is the safe spot, the center. So that gave me the 605, and that gave me the 605 on the put on the call. So it's a lot of work on it. Like I'll be over here clicking, and then I put my mic out of the way so I'm not, and then I got to get it down, and you know what I mean. It's just like,
You know what worked out today that we stopped looking at, but after I come back from these two weddings, I wanna look at it more thoroughly with you. Our AVGO Friday trade.
oh yeah, that thing.
It went 150 to 5, and then right now it's around 385. Right, 150 right off the get go. It was ready to go this morning, but you have to do the prep work
I don't know.
pre-market.
I don't know if you remember, when we were around $1,000 in AVGO and even above.
Yeah, you were doing the
Man,
50
there was
cents.
some trades, $4 to 50, 4 to 70, a
Yeah.
beast. And then they messed it up, and get in there and
Well,
slice the thing up.
that's what happens, right? When you slice it up, the
Yeah,
volatility dies,
it,
right? You don't get those
it
$50
dies.
moves, right? You get a
Yeah,
$5 move, right?
yeah,
But it's
yeah,
funny. I did a back test because you know how much I like back tests, and there was a stat. I'm like, okay, if you're red on Thursday, right? Do you get the rebound on Friday, right? So is it a good? And I just kept it simple. You buy at the open, okay, and you've got to assume that they cost $3, right? So do you make at least $3 at the close of the day, right? So I set up all these parameters, and I did this, right, and it came out with a really crazy stat that I didn't even realize. They're like, if the previous week was red and Thursday's red, you have a 15% better chance at being profitable on your Friday trade than if that wasn't the case. So just knowing that AVGO was read the previous week and Thursday over the course of a year gave me a 14 and change percent edge on Friday
yeah,
for the long
oof,
side. And it's like, I
yeah,
love stuff like that.
yeah. And it's just simple,
Yeah. Look at me
It's like,
bloody move right back up to the pivot. I mean, it's just been a balanced day. It's been an outside, inside balanced day. But you have to have the patience to wait for an extreme outside.
Hmm. AVP, did you take that TLT call spread or whatever it was? Your
I
strategy
did.
was
Yeah,
on?
yes, I did. I did. Not the call spread, put spread. Remember, I do opposite of a lot of things
Oh,
that you do,
okay.
right?
Put spread.
So
Yep. That's right.
I sold the 83.80. Uh, damn, which account did I do it in? But yeah, yeah, right here. Here it is. I'm up $6 on it in depreciation. Yeah, so I sold January. I just took some extra cash I had in one of the retirement accounts, and I played
Mhm.
it because I don't suspect we get down there. It's going to shed me
Yep.
22% on my capital. I'm okay with that. And I want to own TLT at 83 because you and I went over this, right? Guys,
Yep.
if you're not
Yep.
jumping into ants study sessions, you're missing out. You're missing out. This guy really takes the time out. He's kind. He's not an ass about it. You know, you ask him questions. He breaks things down. He goes over charts, and he's in there for like hours, right? Hours
Mhm.
just showing you stuff, right? And he's very kind. He's very
Cool.
kind
Thank
about it,
you.
right? He's
Thank you.
explained fractals. Um, and if you bring an intelligent conversation to him, you can really have a lot of fun. I mean, last night we were looking at shipping stocks, and everybody chipped in, right? Uh,
Hmm.
everybody took turns. They gave a little information, looking for the things that we weren't looking for. But that's what this is. It's a community, right? I wasn't looking
Hmm.
at TLT at all. TLT, I've traded TLT all my life. I wasn't looking at it
Yep.
because he brought it to my attention. It gave me a trade, right? It gave me a trade. You know, one of these days he's gonna come over to my house and actually press the enter button so I can make this kind of money. But that's a different a story for a different day.
Yeah. But
Because
yeah, thanks for the
he'll
kind words.
always 2 days later he'll be like, "Did you take it?" I'm like, "No." Well, it's up 4,000%. I'm like, "Got
Yeah.
it."
You don't answer your DMs, what
Yeah, dude.
in time. But I'm glad you
It's
took
a
that trade
whirlwind.
though.
Yeah, yeah. No, absolutely. Absolutely. And you took the call side of it, right? I took the put side of it, right? You probably bought premium and I sold premium, right? And he'll make more money buying a call if it works out,
Hmm.
the thesis works out, than I will selling the put side, but I've got zero stress. I don't have to worry about it. Time is in my favor.
Yeah, right. It's been going sideways for since 2023. 3 years you
Yeah.
could have collected premium, time decay,
Yeah.
Iron
Yeah.
Condor, whatever you like. Yeah,
Yeah.
so
Yeah.
many strategies it offers.
Yeah, I
I
think Anton
remember.
the other night I was checking, and man, you guys were in there for hours.
Yeah.
Sometimes I'll come there and listen, and I was like, oh my god, like a machine, like
Yeah,
Terminator of the
I
stock
went to
market.
bed last night. I
on a
grabbed my
mission.
iPad and I like to read in bed. And I was just looking, I was actually looking for your post, Russell, right? I like to reread your post because you and I are in it the whole day, right? By trading this and that. I miss so many of the things that you actually write that's so valuable. So I said, I'll go back and read it. And I see, what the hell is that? The study group. So I pop in, right? Uh, yeah, I'm like, I'm too lazy to go to my office to do it properly, but I'll pop in, I'll say hi. I'm there is writing notes on my phone while I got this thing in the iPad. But hey, it led to a trade for today. Look, we're
Yeah.
at 3:30 on a Friday. If it wasn't for end of day, we'd all be running away. We like this user end of the day trade. She puts in a
Oh,
lot of
game
time.
changer. Game changer for
Yeah,
sure.
yeah. Fridays are a little dangerous though, right? Fridays can pay. I'm not on the credit side at the end of the day on Friday. I'm on the debit side, and I'll tell you why. Russell showed me the light. You can get you can get some stupid exposure, right? Positive exposure end of the day on QQQs and spies. So I'm okay. I'm okay just watching it, learning. But you know, it's a part of fractals, but you'll find every now and then somebody will take ownership of Russell's IP, right? In the sense of in a positive way. There's some idiots who do it in a negative way, but in a
Yeah.
positive way. You know, user has really taught herself how to calculate the end of the day, and she does an excellent job. So much so that my laziness shows, and I rely on her versus doing it myself. You know, uh, but you know, it's a lot of work. I give it to her. You got if you make money, you should thank her because she takes 30 to 40 minutes out of her day in the middle of a trading day. You know, she's trying to be a professional trader. That means you know you're at work, right? If you have to sidestep, that's a problem. You're giving up opportunities because that's what we do. We sit here, watch, and look for opportunities. They come all the time, just don't know when. But she does it for the greater good, and it's a fantastic thing. The same thing that Russell does all day long. This isn't easy. This is not easy. I can't tell you how many times I mute myself and go, God damn it, I just missed it because my eye wasn't on the screen. It happens. So, you know, Russell, I thank you for all that you do. It helps me personally a lot.
Hmm.
Oh, yeah, no problem. It definitely makes it more challenging trying to manage. Right now we're at the top of our purple. You can see right there
Yes.
on that 15 minutes. They're like, we usually don't
No,
close
right.
up out of that. So they're all thinking about it. All the
So that
market
was.
participants.
Oh, okay. Look at that. The ceiling just came here. So technically, the ceiling is trying to cap it at the pivot right here. I mean, it's going to be interesting. See now this is the dangerous part, right? Because we should be reverting inwards on end of the day. Am I right here?
Yeah, so I'm looking at the QQQ and we're kind of at the top. We're at a natural resistive area. I'll
Right.
I'll let me mark that so you can kind of see what I'm babbling about here. We've got so remember AVP like I think 2 weeks ago, 3 weeks ago, something like that. We were on a Friday and I'm
Yep.
like, oh, probably go positive exposure plus
I'm like
two.
BS,
And you're kind of like,
and
go
you
that
were
far up,
100% right. Yeah.
Yeah, you're like, we're gonna tack on 2 points at the
Yeah.
end. I was like, yeah, tack on 2 points. But so this is what so I'm gonna show this. This has no hope of positive exposure. Absolutely none where it's at. But it
Okay.
can
Okay. I want to
because
know
we
why
gotta
you're going to
be up
say
at the
that.
resistance.
I'm listening to you, so I want to know why you're going to say that. Now I'm really curious.
Post something here. And we can tell when a positive exposure move is in the process of building. If you look at your PML, see how we're peaking at the PML. So I just posted it in Professional's Desk. We've got
Okay.
the PML with peak. We've also got the green with peak that's coinciding with PML. PML is like exploring the contract range and what's benefiting the riders. So it's basically putting a resistive area right there above us. And with that in play, unless something could happen in the market last few minutes, it could, probably not. But with that in play, we can't even get to the ceiling. We got to be at the ceiling first off for any hope of positive exposure. Yeah, this is for QQQ. Let me add.
I mentioned it.
Oh, okay. Okay, good. Yeah. So that's defining a resistive area up there. And